to the COVID-19 pandemic. Today's meeting is taking place by video conference, and the proceedings will be made available via the House of Commons website. And just for committee members, we've had lots of reading material for this meeting today. The COVID-19 report, which is getting longer by the week, and the report of the Canada Pension Plan Investment Board. So we're fortunate to welcome to the committee today, on behalf of the Canadian Plan Investment Board, Mr. Machin, President and CEO, and Michael Leduc, Senior Managing Director and Global Head of Public Affairs and Communications. Mr. Machin, floor is yours. Welcome and thank you for coming.
Perfect. Thank you. Thank you and good afternoon, Mr. Chair and committee members. I'd like to start my remarks by commending members of Parliament for your dedicated public service in response to the COVID-19 pandemic. I recognize these are difficult times for many of your constituents. When faced with a crisis of this scale, your role as elected representatives becomes even more important. My name is Mark Machin. I'm the President and CEO of CPP Investments, and I'm accompanied once again by my colleague, Michel Leduc, who's our Senior Managing Director and Global Head of Public Affairs and Communications. Ceci est notre quatrième fois.
This is our fourth appearance before the House of Commons Standing Committee. And it's great to see some familiar faces. I look forward to meeting the newest members of the committee. I am disappointed that we're unable to meet in person this year, but I'm also very grateful that we can at least do it virtually.
CPP Investments has a critical mission, which is to help ensure Canadians have a strong foundation of financial security in retirement. To do so, we invest the assets of the CPP with a clear objective: to maximize returns without undue risk of loss, taking into account the factors that may affect the funding of the plan. We're governed by federal legislation, the Canada Pension Plan Investment Board Act, or the CPPIB Act, passed by Parliament in 1997. The decisions made by policymakers at that time set us on the path to become the organization we are today. As outlined in the CPP Act, the assets of the fund are managed in the best interest of the Canadian contributors and beneficiaries who participate in the CPP. These assets are strictly segregated from government funds, secured and managed professionally, exclusively to pay earned benefits among contributors. CPP Investments operates at arm's length from federal and provincial governments, with the oversight of an independent, highly qualified professional board of directors. Management reports not to governments, but to our board of directors. And any amendments to the CPPIB Act requires the consent of at least 2/3 of the provinces that participate in the CPP, representing 2/3 of the provinces of the population. CPP Investments is a strong believer in the value of public accountability and transparency. Our act holds us to rigorous accountability requirements, but we also go beyond our legislated requirements and make every effort to ensure that both federal and provincial stewards, as well as Canadians, are kept informed of our activities. Our approach to meet the fund's investment objectives has a dual focus. It is designed to achieve long-term total fund returns that will best sustain the CPP and pay pensions, and to generate returns above what could be achieved through a low-cost passive investment strategy. To succeed in highly competitive global financial markets, an investor must have and make good use of its comparative advantages. The enduring nature of the fund, our governance, talent, culture, and strategic choices drive our global competitiveness. Our investment strategy is designed to deliver a highly diversified portfolio that will maximize long-term returns without incurring undue risk. We are invested globally across public equities, private equities, bonds, private debt, real estate, infrastructure, and other areas. Today, more than 20 years after receiving our first $12 million of net inflows from contributions to invest, the fund surpassed $400 billion and is among the world's top pension funds. Our governance structure and clarity of mandate are internationally recognized as a leading example for other countries to emulate of sound management of national retirement plans. This has been a challenging few months. The health and social impacts of the COVID-19 pandemic upended the personal and working lives of Canadians and billions of people around the world. The COVID-19 pandemic threw the global economy and financial markets into turmoil. Volatility spiked to near historic highs. The Dow Jones had the most challenging first quarter in its 135-year history, dropping 23%. And Canada's main public exchange suffered its biggest drop in 8 decades. The Canadian dollar slumped to multi-year lows. This all happened during the last few weeks of our fiscal year. For institutional investors, market conditions such as these will test both investment skill and organizational strength. While preventing losses does not receive the same recognition compared to delivering stronger returns, it is equally important, if not more so. While the specific threat of the COVID-19 pandemic was something few of us could have fully predicted, the likelihood of a global event leading to market turmoil was something we could prepare for, and thankfully, we had. The label radical uncertainty appropriately describes the impact of the global pandemic. However, we designed our investment portfolio to be resilient through wide-ranging economic conditions, including in the face of severe or radical uncertainty. Diversification through active management, when planned and executed effectively, is the most powerful shield to strengthen financial resilience. The execution of our strategy demonstrably placed the fund in a safe harbor. From an operational perspective, preparation is the key to effective response to a crisis. In recent years, we advanced our readiness by developing financial crisis, business continuity, and pandemic response plans. Plans were necessary, yet insufficient. We conducted multiple realistic exercises to put our plans into practice. We enhanced our risk management framework, asset valuation processes, as well as our digital and information technology capabilities. That foresight proved to be invaluable. Once COVID-19 began to spread, we were able to act swiftly. We went from 9 offices globally to 1,800 individual home offices in a matter of days. Our board of directors, senior management team, investment departments, and core services rallied to guide the fund through the crisis and to help protect one of the core pillars of Canada's overall retirement security system. Through those efforts, I'm privileged to report to Canadians and this committee that the CPP fund is sound. At the end of fiscal 2020, the fund reached $409.6 billion. Let me break that down. We started the fiscal year at $392 billion and added $12.1 billion in net income after all costs. Despite the devastating market conditions in our fourth quarter, this represents a net annual return of 3.1% after all costs. Our increase in net assets also included $5.5 billion in net contributions received. This 3.1% fiscal year return was down from the 12.6% return we achieved during the calendar year of 2019, and that demonstrates the impact of those last few weeks of our fourth quarter on our reported performance by March the 31st, 2020. In reporting on a fiscal year basis, we added an extremely difficult 90-day period and dropped our fiscal 19 Q4 results, which were very solid. These reported numbers are superficial because, one, we don't plan or implement or invest with a view to any 90-day window, and two, no CPP benefit is determined by quarters. As a manager of a fund with an exceptionally long investment horizon, long-term performance is what matters most and what ultimately helps pay pensions today and tomorrow. And I'll get to the relevant measures momentarily. While our recent returns were impacted by the COVID-19 crisis, our strategy sheltered the fund from the larger losses that our benchmarks faced. Those benchmarks indicate what would have been achieved through a passive investment strategy. This fiscal year, we generated an additional $23.5 billion for the fund in dollar value added, or DVA, as a result of active management. Turning to more relevant time periods, over the last decade, we generated close to $57 billion of DVA for the fund. At the end of last month, on May the 31st, our 10-year return is 10.4%. And over the last decade, we've generated nearly $250 billion in net investment income after all costs. Due to the recent volatility in financial markets, some of your constituents have likely expressed concerns about their personal retirement savings. We hope that these results will provide some reassurance that a key pillar of the Canadian retirement system, the CPP, will be available for them when they retire. But you don't need to believe me. Every 3 years, the Office of the Chief Actuary conducts an independent review of the sustainability of the CPP over the next 75 years. And the most recent actuarial review of the CPP was released in December 2019.
We must be froze up somewhere. Can members hear me?
Yes, I can, Wayne. I know the feeling when you get kicked out. Happened to me a couple times.
Yeah, I've got them doing road work out here, and the post office next door is having big trouble, so I kind of worry about my system.
You're coming through loud and clear.
Okay, I wonder.
But he'll log back on.
Yeah.
Yeah, our guest is frozen there.
Alexander, I expect somebody is working on that. Are they to get a hold of Mr. Mission?
Yes, Mr. Chair, we're going to call him right now.
Good.
It's almost biblical. Many are cold, but few are frozen.
I see. Oh my.
It's too bad because he was going to the best part.
Yeah.
Yeah. Can you pick up?
Yeah. Oh, we'll get him, Mr. Leduc. Hopefully.
Okay.
Where are you at, Michelle?
I am in downtown Toronto.
Oh, you are? Okay.
East of downtown in what's called Riverdale.
We are learning some things about rural areas not having as good a broadband as downtown Toronto in this day and age of Zoom.
Well, part of the issue with downtown Toronto is since work from home, the demands that have been put on the system.
Oh, it'd be unreal.
Have been, and they've been.
Can you imagine the demand in a 200 apartment building?
Yeah.
Working from home. Yeah. I hope you invested in Zoom. It's been used a lot these days.
So I've sent Mark a quick note, so I'm sure he's just rebooting.
Yeah, I think the clerk was also there working their technicians to get to him. Could be a number of things.
Well, I noticed that he just left the meeting, so he'll be back and probably back up and running very shortly.
Okay. Alexander, if I forget to mute my mic when people are speaking, just give me a hands up. I have gravel trucks backing about 2 feet from my wall here, so they're rather noisy. I usually leave it on when I'm chairing, but I'll let them mute.
Understood, sir. And we could actually hear the beeping when they're going backwards. Mr. Chair, we're not able to get in contact with Mr. Machin. He's not answering his phone. And so we left him a message, and we also sent him an email with the connection information so that he can connect. Oh, there he is, actually. We'll let him in.
Hi, can you hear me on this one?
Yep, we can hear you again now.
Oh, okay.
Technology's so much fun.
Yeah, this has worked for about 1,000 calls, but it's just died on me. So I apologize to you and the committee. Where did I lose you, and where would you like me to recommence?
You were just talking about the activist reviews. You were getting pretty close to the end, I think.
Yeah, Mark, you were very close to the end. You were just completing the part on the Office of the Chief Actuary, and then closing ESG.
Okay, so maybe I will thank you for the committee's patience. Let me get to. So I think it's important for me to just to reemphasize that point, though, that don't believe me on the necessarily on the sustainability of the CPP. It's important to recognize that every 3 years, the Office of the Chief Actuary conducts an independent review of the sustainability of the CPP over the next 75 years. And the most recent actuarial review of the CPP was released in December 2019. And that report concluded that the CPP is sustainable over the next 75 years. And while the report was produced prior to the COVID-19 pandemic, it does account for financial markets volatility, changes to long-term demographic trends, as well as other factors. A key assumption in the report is that the base CPP will earn an average annual net real rate of return of 3.95% over the 75 years covered by the report. The corresponding assumption for the more conservatively invested additional CPP is an average annual net real rate of return of 3.38%. As of this year, our average annual real rate of return over a 10-year period is 8.1%. And the review also showed that investment income in the base CPP account was 107% higher than the expected over the 3 years since the previous review. Of the total $41 billion, by which the fund's assets grew faster than expected, $39 billion came from higher than expected investment income. I may just turn to one last topic. I will skip over part of my prepared remarks given the delay. But the last thing I do want to touch on is our approach to environmental, social, and governance factors, or ESG. We're always looking for ways to evolve as an organization, and this extends to our approach to ESG. We consider ESG factors when calibrating the portfolio over the long term, in evaluating investment opportunities, understanding the approach of our partners, and engaging with companies to seek improvements in business practices and disclosure. Being an engaged owner can enhance the long-term performance of the companies in which we invest. Climate change and the gradual transition to the low-carbon environment will also continue to influence the world we live in. We have committed to be a leader among asset owners in understanding the risks posed and opportunities presented by climate change. We've developed and continue to improve our systems and processes to ensure we fully understand the risks and opportunities presented by climate change. We do this in accordance with the existing legislative provisions in the CPP Act and our investment objectives. With that, I will conclude my remarks, and both Michelle and I welcome the opportunity to discuss how we invest the funds entrusted to us on our role in helping ensure the CPP remains sustainable for future generations. We look forward to your questions. Thank you. Merci.
Thank you. Thank you very much, Mark, and also thank you for the report you sent us earlier. So we'll go first to a 6-minute round. I'll lay out to who's on the list. First up is Mr. Polyev.
Yes, and
then I don't see him. You starting,
yes.
Michael?
Yeah, I'm going to start.
First with Michael, then Ms. Kotrakis, Mr. Saint Marie. Did you say Barcelo Duval was taking the first round here? Just let me know when we get there. And Mr. Julian. So, Mr. Cummings, you're on.
Mr.
Cooper.
Yes. Thank you, Mr. Chair, and I want to thank the witnesses and also acknowledge the time that Mr. Leduc did spend about a week or two ago with me, but I appreciated it going over some of the issues respecting the CPPIB. I want to ask the President some of the points that I did raise with Mr. Leduc during our meeting, and in that regard, I understand that at present, about 11% of the CPPIB's portfolio is invested in China. I have seen some projections, but that is set to increase to 20% of the portfolio as soon as 2025. In light of the current geopolitical climate and having regard for China's blameworthy conduct in the COVID pandemic, coupled with the fact that other pension funds are doing exactly the opposite. For example, the Federal Retirement Thrift Investment Board, which administers the Thrift Savings Plan, the largest pension plan in the U.S., has just recently halted all investments in China. What is the position of the CPPIB going forward vis-a-vis China?
Yeah, well, thank you for the question. So there's really two reasons that we invest in China. And the first is it is a very large market. It's the second largest capital market in the world. And therefore, it's one that we can diversify into. And it's one that is, in many ways, uncorrelated with the rest of the world. And in fact, arguably increasingly uncorrelated with the rest of the world. And from a portfolio construction point of view, that is quite valuable, because when there's turmoil in other major markets, there may not be turmoil in that market, and vice versa. But the diversification benefit is the most powerful factor that encourages us to continue to have some exposure to that market, given it's the second biggest market. The second reason that we invest is alpha, or what we call outperformance relative to an index. And that's very hard to come by, but is incredibly valuable for a portfolio. So if you can pick the right stock over the wrong stock, so if you can pick the Alibaba over the Looking Coffee that some of you will have seen was a debacle and faced delisting from the US exchanges recently. So if you can pick the right stock over the wrong stock, the right building over the wrong building, the right company over the wrong company, the right fund over the wrong fund, there's a huge amount of value. And there's a lot of research showing how much alpha, how much value there is in that. And it's much more than in developed markets. So they're really the two reasons why we invest in the market. And so far, it has performed well for us. Our Chinese investments over the fiscal year were up almost 10% and performed well. And again, if you look at the performance just in March, for example, the Chinese market was essentially flat in comparison to where the US markets, North American markets were trading at that point. So they're the reasons. Having said that, we have two sides to our mandate: maximizing returns without undue risk. So it's very important for us to thoroughly understand all the risks of investing in any market. and all the risks, not just at an individual security level and an individual company level, but also the risks of the market overall and where they might be going. And so we spend a lot of time understanding those risks.
Well, thank you for that. And I would acknowledge that the portfolio is well managed. And I don't question that diversification plays an important role in that regard. But nonetheless, you did cite Alibaba, for example. Now, Canada, the CPP's IB's investment is in Alibaba Group Holding Limited. Is that correct?
Yeah, it would be in the listed company that's listed in New York and Hong Kong.
Okay, and it's set up as atop a variable interest entity, is it not?
Correct. Yeah.
Now, does that cause you some level of concern in terms of how the regime may approach variable interest entity? We know, for example, that the Chinese Supreme Court or Supreme People's Court held or declared that VIE structures are illegal. Now, in fairness, that's a civil law. The court has civil law jurisdiction, limited jurisdiction. But does that cause you some concern?
Yeah, I think contractual structures like that are important to analyze and reach a really thorough understanding of the potential risks that are involved, and that is absolutely one of the factors that is taken into consideration when the teams invest in any company. I think a company of the size and importance of Alibaba, it is something that it's unlikely there's going to be some radical change to those contractual structures, but certainly it's not something that we're naive to, and it's something that we've studied very carefully. Yeah.
Right, and we have seen in the past other international investors, for example, with China Unicom back in the 1990s, where the central government forced certain structures to be unwound, which disadvantaged international investors. I just want to ask you as well, I saw that recently there was an investment in Ant Financial, which is a company that about 2 years ago was blocked by the U.S. from acquiring MoneyGram on a $1.2 billion acquisition on the basis of national security concerns. I was just wondering if you could tell me a little bit about CPPIB's investment in Ant Financial.
Sure. Yeah. So we did invest in Ant Financial a couple of years ago. It is partly owned by Alibaba, and it is the largest fintech company in the world. So they provide financial services mainly for very, very small investors, smaller investors, medium-sized investors, and SMEs. It's increased financial inclusion in China, and but it's one of it is by some measures the largest fintech company in the world, and one of the most successful so far, and an investment that we are quite comfortable with. That they, like many Chinese companies, have had challenges making acquisitions, particularly in the US, but increasingly in other countries around the world due to concerns over national security. And so I imagine they were disappointed by their inability to complete that transaction, but I understand MoneyGram has a number of different functions, and so they were they probably should not have expected to have been able to acquire it in the first place.
Okay, we'll have to end it there. We're substantially over. Ms. Kotrakis, followed by Mr. Barcelou-Duval.
Thank you, Mr. Chair, and thank you to our witnesses today. I am pleased to hear about CPP Investments' rate of returns and your performance given the economic uncertainty we are facing today. Canadians can be confident knowing that the CPP will remain solvent for at least 75 years, and I commend you on your efforts to create a sustainable pension plan for Canadians. That being said, there is always more that can be done to support Canadians in retirement, and I look forward to our discussion on CPP Investments, investment strategy, and sustainability as we emerge from the pandemic. I understand that your investments in real estate and infrastructure represent 20% of your assets. With COVID-19, we seem to be seeing that potential for a real shift away from business air travel, commuting, in-store shopping, use of offices, etc. One would expect your real estate and infrastructure portfolio, which includes assets such as airports and office buildings, and which was worth about 80 billion, will be affected by the long-term impacts of COVID. Has this been reflected in your latest results, and do you see these as potentially permanent shifts? And what do you plan to do about it?
Yeah, thank you. Really excellent questions, and ones that we wrestle with, all the time. I think it's really interesting. If you look at the real estate portfolio and real estate industry, there are certain parts of it that have been really benefited in some ways from the pandemic. So, for example, I hesitate to say data centers and broadband, but certainly, seeing as I was cut off a minute ago, but certainly that is, data centers have been an area that have really benefited. Logistics, anything that's involved in e-commerce and home delivery and logistics have really benefited. So those areas are booming. At the other end of the spectrum, you have hotels and hospitality and also shopping malls, and they've been really hard hit. And in the middle, you have office, which I'll come back to. On hospitality, we have very little exposure to hospitality. We don't invest in hotels and the equity of hotels. We've had that as an investment strategy for many years. We never liked hospitality as an area to invest in. Shopping malls, we do have exposure to both in Canada, in North America, and Europe, and around the world, and they have been hard hit. We tend to invest with very strong partners and in what we think are the destination malls rather than smaller malls. But I would say for the North American shopping mall industry, this is going to be a really tough time if there's going to be a requirement for social distancing, rather than what their strategy is to try and get as many people through the mall as possible. In addition, arguably in North America, shopping malls have been very overbuilt. By some estimates, there's 4 times the number of malls that are needed in the US. So there was always an expectation these were going to decline. This has probably accelerated that decline as more people have gone to e-commerce rather than going to a physical store. And that's probably going to accelerate this transition of the use of those shopping malls towards other things, such as fulfillment centers or entertainment centers. On office, I'd say it's interesting. The jury's out amongst smart people right now. On the one hand, as long as there is a requirement for social distancing, then arguably people are going to need bigger floor plates if you can get the people into the offices. On the other hand, yes, the work from home environment generally has been one that most companies in the knowledge industries have been able to cope with, and it's worked. And so there's probably going to be some stickiness of the ability for people not to need to commute all the time, and to be able to work from remote and work from different centers. And I personally hope that does stick to some extent. Having said that, it's still not clear what human behavior will revert to. And generally, having been through a much shorter episode of SARS back in the day, which a number of the committee members will remember, there was a lot of talk back then about people permanently working for remote. Didn't happen. So it's possible people will revert to the behavior of wanting to work together in teams, see each other, have physical, be physically close to each other. So not clear yet, something we're watching very carefully and watching behavior very carefully on. Sorry, I didn't mention infrastructure. We don't own any airports, not necessarily from a strategy point of view. I wouldn't like to say we were really smart on not owning airports. We couldn't find one that we could buy at what we thought was a reasonable price. So we were consistently outbid over the last 10, 12 years around the world on airports. And so we have 0 airports in our infrastructure portfolio. We do have other assets, which I'd be happy to talk about, which some of which have been impacted and others which have been less impacted.
Are there any long-term trends that the CPPIB is observing as a result of the pandemic? And do you see any buying opportunities that these trends may present, like a once-in-a-lifetime buying opportunity as a result of the COVID?
Yeah. I mean, we'll see whether once-in-a-lifetime opportunities come back again. I mean, there may have been some in the depth of that crisis, and certainly we took advantage quickly of some opportunities. Particularly in the credit markets. But I think the long-term trends, what's happened here in the short answer is an acceleration of a number of trends that were going to happen, particularly acceleration to online. So anything fintech related, referring to my previous answer, the stickiness of people moving to home banking and doing the finances online, things they've been forced to, particularly in older age groups, that's something which is likely to stay. The same with telemedicine. People who've used telemedicine have really enjoyed the experience and are likely to keep going in that direction. I'd say home education, mixed views. I'd say what we found is in the East, people in India, people in Asia who've used home education have had a really good experience. People in the West, in Europe and North America have had a really unsatisfactory experience and really haven't enjoyed it. We're trying to dig into why. It's some speculation that in the East, there's much more specialized apps and companies that have been very creative on designing a particular online experience that really engages and is tailored to students. Whereas in the West, people have just generally had the traditional teacher get online and try and teach a class, which has not worked so well. So there's a lot of trends like this that we're trying to analyze and be ahead of. I mean, one other one I'll mention, which is going to be a longer term trend, but I think the move to autonomous vehicles. I think a lot of us, if there had been an autonomous vehicle to jump into to get us between one place and another, we would have done that rather than being next to another pair of lungs. So that's something that we will we continue to invest in, and we made a number of investments around that area.
Thank you so much for that, Mr. Chair. It brings me back to my CIBC with Gundy days and speaking to all our analysts. So thank you so much for that response.
Thank you very much to you both. We'll turn to Mr. St. Marie, I believe, is up in the first round. Go ahead, Gabriel.
Oui, merci, Monsieur le Président. Donc, d'abord,
Thank you, Mr. Chair. I'll take the first turn, and Xavier will take the second round, and the same will be for the same group of questioning. So, Mr. Machin, Mr. Leduc, good afternoon, and thank you for attending. Thank you, Mr. Machin, for your presentation and for the cogent answers to our questions. Financial markets are very volatile since the onset of this pandemic. It's quite worrisome. I'd like to have your analysis of the linkages between the pandemic and what is actually rolling out on the financial markets, perhaps your forecasts for the coming months. But I'm focusing on one specific thing. Governments in well-endowed nations financially have taken wage subsidies very significant, and liquidity measures as well, quantitative easing among others. A large part of this new money, this new liquidity, has not really met demands, whether it's debt or whether it's investment potential, and will perhaps end up by artificially increasing the price, if not the value, of assets on a global scale. So a financial bubble, in other words. However, what is your opinion on the potential future forecast for the next couple of months?
The excellent question. I mean, this is one that we will consistently wrestle with. I mean, just briefly to your first point, I won't give a market forecast. I'll give an economic forecast, at least based on our economics team. And certainly, it's a depressing environment Now, these forecasts, we hope are negative, and will be revised upwards over time. But certainly, for the moment, we see that Canada's in a very sharp recession and likely will grow negative 7+% this year, but hopefully will bounce back 8% next year. Similarly, the US is over 6% negative for this year, and globally we see 3.8% negative growth for this year. So it's a very sharp recovery. We predict at the moment that the economy won't recover fully to its full pre-COVID level of output around the world until the second half of 2022. So that's our current prediction. We're looking at it very carefully based on the employment forecast, based on hopefully a little bit more optimism around vaccine research. But that's our current prediction. I think to your point on asset prices and how they may have moved given the stimulus, that's certainly something that in the short term, I think people are taking quite a lot of relief from, that there has been a huge stimulus around the world, both on the fiscal front and on the monetary front. And it's had its impacts of, certainly for most of the time, although we've had a difficult day to day in markets, I think most of the time it has put liquidity back into markets and put confidence back into markets. But you are right that it is possible that this will result in very high asset prices, and certainly we've seen a very surprising and very rapid rise in equity markets until this morning. And we've certainly seen very little fall off in real asset prices around in many markets. And so while that is comforting as an owner of assets, it is something that we are looking at very carefully and making sure we have a portfolio that will perform no matter what happens, no matter what risks emerge, no matter what events might happen. So we consistently stress test for what would happen if there was another scenario like the global financial crisis that happened tomorrow. What happens if there was something even worse than that happened tomorrow? It's certainly something we don't wish for, but it's our responsibility to make sure we understand what the consequences of that would be and make sure that the portfolio would be safe even through those types of events.
Je vous remercie pour cette.
Well, thank you very much for a complete answer. And on another point, as productivity of the portfolio is a major objective, of course, for the CPPIB, you want to have positive returns, not only for the fund, but also for society. Now, much as the Caisse de dépôt, do you take into consideration the social consequences, or would you need some more legislative change so that you could perhaps channel certain advantages or benefits of the fund to green projects, for example, or in response to climate change? You did talk of ESG, so perhaps you might expand on that a little bit. Thank you.
I'd say two things on that front. One is on the structure of our mandate, and then secondly on our investments in the energy transition. So first of all, I think the country has been really, really well served by the simplicity of the mandate that we were given back in the CPP Acts back in 1997. Which is maximize returns without undue risk of loss. And then it was left to professional board of directors and management teams over the years to figure out how to do that. What is the best portfolio that we can find, whether in Canada or around the world, to achieve that objective? And it's a very, very difficult objective. Managing money is not simple. It's very competitive, and it's one that having that clarity of purpose has made it at least slightly simpler for us to execute, and it's served really, really well. So we always have the interests of building value in the fund, and that is the number one thing that drives what we do every day. So I think if you load in other complexities and objectives, then it becomes much more difficult. And there are obviously compromises and trade-offs. And so I think it's something that the country was very smart about. People were very smart about back in 1997 in setting the fund up this way. And I think it's been it's really proved itself over the years, and is the envy of the world, frankly, as a simple, straightforward way to set up the objectives of the fund. Having said all that, we do believe climate change is happening, and we do believe it is a major risk. And so for the last 12 years, we've been focused on understanding the risk. And it's challenging. It's a very, very difficult risk to understand. We publish a sustainable investing report, investing responsibly for CPP contributors and beneficiaries. We publish it every October. And it goes into some depth about how we are thinking about climate change and what we're doing with respect to it. I'll just give a couple of highlights around it, because it's a long topic. But the first is that every single major investment we make must take into account climate change risks before, and make sure that we understand those risks, what might happen to the company, what might happen to the asset before we make the investment, and that we've been sufficiently compensated for it. So, for example, in the last year, we invested in a toll road in Indonesia. One of the major issues was, what will happen with climate change? What will happen to flooding? What will happen to the geography around that toll road as climate changes? If it changes worse than we hope it does. So understanding the risk is really important. And then the second thing is understanding overall what the risks are we have in our portfolio from a top-down perspective, and stress testing the portfolio depending on whether we have faster shifts in climate or slower shifts in climate. So it's a complex area. It's one we are determined to be at the forefront of understanding those risks and understanding where the opportunities lie around it, so we can invest in those opportunities as well.
Thank you both. We're substantially over, but it'll let people go when I think there's information being provided. We will now go to Mr. Julian, who will be followed in the second round by Mr. Polyev. Peter?
Merci beaucoup, Monsieur le Président, et merci.
Thank you very much, Chair, and I thank the witnesses for their presentations. Mr. Machin, and I hope your families are all safe and sound. Mr. Machin, I have one question, several questions, but I'll start with one, and I hope for brief answers. Mr. Julian's presentation is breaking up, and the interpretation can't grasp what he's saying.
Gérer la computation pour les hauts dirigeants.
The translators can't catch what you're saying. You're breaking up somehow. Maybe try a little slower. I don't know.
OK. Je vais tenter de parler plus lentement, Monsieur le Président.
I'm afraid that Mr. Julian is still breaking up quite a lot, but at a slower rate. We will try. The
English translation isn't coming through. I don't know why. Try your English channel and see if that works. I don't know. It's breaking up. The translators can't pick you up for some reason.
OK, mais est-ce que je peux parler en français quand même? Je suis sur le poste anglais présentement. Est-ce que ça fonctionne? Est-ce que vous pouvez m'entendre?
The interpreter can hear him, but he is on the French channel, so there may be interference, anyone else listening in French. Okay. All right. Correct. This is good. This is good. Go ahead. From the top. Would it be appropriate to increase compensation or salaries during a pandemic? The next is on CMHC throughout the country, with Riviera and investments of like measures done by another pension fund, of course. Questions would be, does Investments Canada have investments in long-term care centers or facilities in Canada? And that's my question. Thank you.
Mr.
Okay, thank you. Yeah, thank you. I think I got the first and the last question. Maybe I'll take the last question. I'm just trying to understand the second question. But on long-term care, in fact, my colleagues didn't get the second question either. But so perhaps we could get that repeated. But on long-term care. The answer is effectively no. We don't have any significant investments in long-term care homes. I mean, technically, we have some extremely small holdings, which we only have through index holdings. I would say that obviously we are really sensitive to the very difficult time that people have had in these long-term care homes, but certainly in Canada, it's not something that we have had significant exposure to.
Thank you very much. My first question was about executive compensation. Other pension funds have basically frozen compensation. Yours has increased this year. And my question was whether you felt that was appropriate. But I want to move on to a key point of your presentation, which was the issue of radical uncertainty. Climate change is the big radical uncertainty facing our country and the planet. It'll cost us $5 billion this year, as you're well aware, $50 billion a year as we go over the next 3 decades. So I'd be interested in knowing, what is the sum total of carbon reserves held in companies that have been invested in by the CPPIB? So what's the sum total of carbon reserves, and of course the risk that goes with that of stranded assets? And secondly, if we meet our climate change objectives, and secondly, could you tell us the sum total of members of boards or managing directors within the CPPIB that are also holding positions as board of directors in oil and gas companies? And isn't that a clear conflict of interest? What's the sum total managing directors and members of the board of directors that also sit on the boards of oil and gas companies?
Okay, very good. So on the carbon footprint. So in our sustainable investing report, we on page 61, we disclose using both scope 1 and scope 2 definitions the amount of greenhouse gas emissions from the portfolio. And we also disclose it on an equity ownership basis, so the percent of equity ownership and also the percent of the long-term capital structure that we own. So this is across all assets across the portfolio. And so to give you a number, this is challenging work. There's a lot of estimates that go into this. We use as much as we can the specific information that are disclosed by the companies we invest in. But it's about 25.7 million tons of carbon dioxide equivalent is the based on long-term capital ownership is the amount of our total carbon emissions across the fund. So now it's challenging. We have used S&P True Cost, division of S&P, to try and get to as accurate a number for the companies where we're using proxies and estimates. But that is, so at the moment, based on proxy data, we're using about 53% of that number, 18% is coming from company reported data, 14% from True Cross models. So that gives you a sense of the amount of carbon carbon emissions that comes from the total portfolio. With respect to your second question, I'm not sure I have the numbers completely at hand on how many people sit on oil and gas company boards. I mean, in boards generally, we across all of our invested companies, we have about 190 board positions that for all of the boards that we sit on across all the portfolio companies, some of which are direct, some of which are our employees sitting on companies, and some of which are where we will find a particular expert that we think is appropriate for that position to act on our behalf. So a handful of those will be on traditional energy boards. And I'd say another cut would be if you look at the overall portfolio and how much we have invested in traditional energy, it's about 2.8% of the portfolio at year end. I'd say our renewables portfolio right now is over 2.2% at last count and climbing rapidly. So I would imagine in the short term, our renewables portfolio percentage will exceed the amount that we have in traditional energy, and that makes sense given the move along the energy transition.
Peter, we get time for a quick one. I knocked off that time. We had trouble in the beginning.
Thank you very much, Mr. Chair. Could you provide us with the list of managing directors and members of the board that also sit on other boards? And secondly, coming back to the issue of executive compensation, I'll ask you, do you feel it's appropriate in a pandemic when other pension funds have frozen compensation for their executive officers?
Yeah, certainly can follow up with the information on the managing directors and board directors. As far as I recall, and my colleague Michelle may correct me, but I am not aware of a board of directors sitting on the board of oil companies. But we'll have to double check that. With respect to compensation, I'll also let Michelle cover that.
Michelle, the floor is yours.
Yeah, thank you for the question. As you can imagine, executive compensation, as is the case for most organizations, is set by the board of directors. Now, as it turns out, there was actually a piece of comment that had been published in the National Post about CPPIB's compensation, which gave the opportunity for our chair of the board to respond. And we'd be more than happy to provide the chair's response to the clerk for the committee. But maybe I could just, if I have a little bit of time, I could summarize the contents. First, just to be clear, the board did establish a salary freeze on the CEO's salary for the current year, as well as this freezing the salaries for all senior executives at CPPIB in recognition of the economic circumstances caused by COVID-19. As regards to incentive compensation, that's a look back. And that's looking at past performance of 20 quarters. And not only the 20th quarter that rolls out the fifth year which the incentive was based. And that's essentially to recognize the importance of aligning behavior, especially a long-term investor, aligning investment behavior with the long-term decisions and not making short-term decisions that may not be in the best interest of the fund. As we have seen, significant economic problems have been caused by short-term thinking in the financial sector specifically. In the first 19 quarters of those 20, tremendous value was created in the order of about $140 billion in net income. In the 20th quarter, where the pandemic hit, the fund was impacted, so total fund returns were affected. Having said that, all of the decisions that had been made because of active management, because of the strategy put in place by the management team, a lot of the diversification well beyond what would be available in public markets. The fund was actually placed because of its resiliency in a safe harbor. Had it been invested in the passive strategy, a low cost, simple strategy of indices, the fund would have dropped by about $23.5 billion more. So I think it's both a recognition in terms of incentive framework for the performance of total fund returns, those 19 quarters, as well as the relative returns. But as I've said, those details are laid out in the letter from our chair, and we would absolutely share that with the committee through the clerk, if that's
okay. Thank you, Mr. Leduc, and just send that letter to the clerk. We'll go to the second round. 5 minutes. You can likely hear the gravel drop beacon here. We'll start with Mr. Polyev and on to Mr. Fragiskatis.
Thank you very much, Mr. Chair, and thank you to Mr. Leduc and Mr. Machin, not just for your appearance, but also for the openness with which you shared information with members of Parliament and remained transparent while you do a very difficult job in a tremendously unusual time. I'd like to discuss the times we're in. I think all of us expected catastrophic drops in the market in the as soon as the governments of the world started locking their workforces down. And that did happen, albeit only briefly. In the late March, markets crashed, and by about a third here in Canada, roughly the same in the United States, but then they came roaring back. That bounce back seemed to coincide with the enormous amount of money that our central banks have been printing here in Canada. It's now about $400 billion of what is effectively quantitative easing through a bond buying program. In the United States, there's been a similarly large program of purchasing assets, an extraordinary purchase of bonds, not just government bonds, but now also private bonds. In Canada, the bank is buying $10 billion worth of private sector corporate bonds. And the result is that markets are surprisingly valued. According to the Cape-Shiller price earnings ratio, the S&P 500 this week was 28, which is extremely high. It's only been that high in the lead up to the tech bubble bursting and in late 1929, right before the great crash that led to the Great Depression. So I want to get your impressions on how our markets are valued right now, and whether you think there is a bubble, and if there is, how are you protecting the $409 billion over which you and your fund is the custodian?
Yeah, thank you. Really important questions, and I think before I give an answer, let me go through what skills we have as an investor, and that is we think we have very good skill at building a diversified portfolio around the world. So we're figuring out what the best long-term portfolio is and diversifying that. And secondly, we think we've got developed skill on picking the right fund over the wrong fund, the right stock over the wrong stock, the right building over the wrong building. So security selection. So diversification and security selection, we have great skill at. The third skill, market timing, is one of those skills that is very elusive for investors, very, very hard to do, and one that we have not. I couldn't put my hand on my heart and say we have developed skill in telling you what the market's going to do tomorrow or even in the next quarter. So it's one that we think is a very elusive skill. We do have a macro investing team that does try to figure out shorter term issues in markets and take advantage of those anomalies. But it is a tough skill to demonstrate. So with all of those caveats, yeah, I would say most people have been quite surprised about the rally in markets until this morning. Now, clearly there's been a significant correction today in adjusting for that. Part of it has been clearly driven by the amount of stimulus that has been provided, both fiscal and monetary stimulus. Including, there's anecdotally in the US, record number of small investors opening accounts and putting money into the market. We've seen extraordinary rallies in the stocks of bankrupt companies. We've seen extraordinary rallies in stocks of well-known companies. And so there's some evidence that people are taking their checks in the US and putting it into brokerage accounts. Now, I hope that doesn't end badly for a lot of people. I do hope that they have been prudent on how they've invested their stimulus checks. But it is an issue and something that we looked at. What can we do? We can make sure that we are really, really focused on our first two skills, and that we're really focused on stress testing the portfolio. So we're really focused on making sure we have a properly diversified portfolio. So all our eggs are not in one market, one basket, one geography, one asset class, one strategy that is properly diversified across multiple different markets, multiple different time zones, multiple different assets. And then, so if something pops in one area, then hopefully other markets are less immune to that. And that's the benefit of the diversification. And then secondly, if we pick the right stocks over the wrong stocks, it doesn't matter if the whole market goes down, we've still made money. And then finally on stress testing, as I said earlier, we run stress tests for what would happen if tomorrow the global financial crisis happens, what would happen if worse than that happens. And we disclose those. They're on page 163, I think, or 164 of the annual report. We go through those stress tests and how we shock the portfolio.
Right.
Got time for another quick one, Pierre. I've been letting everybody go over time because we have a fair bit of time today. Go ahead, a quick one though, if you could.
Thank you very much, Mr. Chairman, and thank you for your answer. And by the way, I'm glad you said you're not trying to time the market. We didn't hire you as a day trader. We hired you because we know you have the brain power to find good value and invest for the long run, and that appears to be what you're doing. So I want to ask about interest rates, and you're not a fortune teller, but you do understand finance better than almost anyone. And I want to ask you about whether or not you worry that in 2 or 3 years, this extraordinary amount of new money pouring into our system could lead to inflation. I know everybody claims the short-term problem is deflation, but I'm talking about the medium term. All of this money is going to stay in our sloshing around in the economies of the world. And if it does, then inflation will result and interest rates will have to go up to contain that problem. How sensitive is your book? First of all, do you agree with that? And second of all, how sensitive is the $409 billion that you have invested on our behalf to future increases in interest rates?
Yeah, so I think it's an excellent question again. I think the risk of inflation is real. It's quite possible. I think there've been massive deflationary pressures for years, whether it's demographics, whether it's technology. Or whether it's globalization, those things have resulted in deflationary pressures generally around the world. If you think I think the first two forces are probably likely to stay in place. The third one is a question mark as to whether that is really going in reverse, and that also could exacerbate potential inflationary pressure over time. I don't think as a fundamental forecast, we're not predicting as a base case inflation. So if you look at world inflation, we expect inflation in our central economic forecast to be about 2.4% for 2022, 23, 2.5% 2024. And in Canada, we see inflation in a similar sort of 2.5 to 2.6% range, and in the US, 2.9 to 3% in that time frame. But that's a central forecast. There are clearly risks. I think if our interest rate sensitivity, we publish in the annual report on page 165, and we show that if you hold all the other variables constant, a 25 basis point move in interest rates would result in nominal risk-free rates would result in an increase or decrease in value in the portfolio of about $2.5 billion. So that's as of March 31. So that's the sensitivity. The longer-term rates are so that's the sensitivity basically. It's about $2.5 billion of sensitivity to the debt instruments in the portfolio. Putting it through the rest of the portfolio is a complicated exercise, but again, part of it would be making sure that we have, again, that diversified portfolio. We have sufficient investments in inflation-protected assets. We have a substantial real assets portfolio. We have substantial investments in equities, of which quite a few of those will perform reasonably well even in an inflationary environment.
Okay, we'll have to end that round there. We'll go to Mr. Pragaskatis and then on to Mr. Cumming. And I might say Mr. Duval or Mr. Leduc. I can see you if you do want to add a point, raise your hand and I'll let you in. Mr. Pragaskatis.
Thank you very much, Mr. Chair. Mr. Mutchin, thank you very much. Really impressive presentation, and you've been quite open with us on a number of issues. I did want to ask you, though, and I apologize if you raised it at the tail end of your testimony. You were hard-pressed to conclude it. And so I wanted to ask, though, a question on whether or not the CPPIB has an estimate, a projection, regarding the rate of return over the next few years. You did cite the report of the chief actuary, and you did make mention of the fact that, in their view, that number has to be at 3.95% in order to ensure the long-term sustainability of the fund. In other words, over the next 75 years. But I wonder, do you have an estimate over what you see as the rate of return over the next few years?
Yeah, so the expected returns of these are expected returns of the reference portfolio for the base CPP from Q1 2020 to Q1 of 2025, and remembering that was at the bottom. So I give you those numbers is about 7.9%.
Okay,
yeah. So that was the current modeling of our economics group. Last time I have an update of that type of for the reference portfolio overall.
When were those projections? When were they arrived at? Pre-COVID,
April, post-COVID. So I'm talking. So that's why. So there's a little bit of a dip there. So you probably want to adjust those down based on the rally in markets between now and then. But these, but basically they're predicting. I think there's two parts to your question. One is returns obviously are from where the markets are at that point to where they're going to be. And now that's clearly going to be dampened by the fact markets have come back significantly. Yeah, but at the same time, I think your underlying question is there going to be dampened returns based on the underlying economic performance? And there, we do expect, as I say, we expect a sort of swoosh-shaped economic recovery at the moment, with economic production back at pre-COVID levels by the second half of 2022. Markets generally precede that because they're always looking forwards. And so, so it does factor in COVID, but this is for a period out to 2025.
But my curiosity relates to what extent do they factor in COVID? So, for example, the World Bank just a few days ago, you would have seen is estimating a 5.2% decline in global GDP over the next year. Granted, and to be fair, they do estimate that global GDP will rebound significantly by, I think, over 4% once we reach 2021. You've told us that we'll get back to pre-COVID levels of economic growth by 2022. So when you cite that rate of return that you just did going forward over the next few years, does that estimate take into account all of those different things? The IMF has come up with projections as well, for instance.
Sorry, let me be maybe a little bit clearer. So the numbers I just gave you were returns for the overall portfolio, and in fact the benchmark for our portfolio. Okay, on an economic front, I also said the output. So we'll be back to the levels of GDP by the second half of 2022. Growth-wise, we expect quite a sharp. There will be, it's a swoosh, but we expect quite a sharp recovery. So we do expect Canada's GDP, for example, next year will be 8.1%, and so you see it's down this, but it's already in the second half of this year. We see very rapid. We anticipate, we hope we'll see fairly rapid growth. So
can you just repeat that number? You said 8.1% related, and that relates to what? Sorry,
that's for calendar year next year for Canada. So if you do a quarter-on-quarter basis for the third quarter of this year, we're anticipating Canada will rebound over 18%, and then fourth quarter over 17%. This is quarter-on-quarter annualized growth.
Understood.
And going into next year, 14%, and then 10%, and then it moderates again in the second half.
Understood.
Next year.
Thanks very much. I also wanted to ask you a question relating to the CPPIB's global focus and approach. So one of the things that's been looked at in terms of the monumental growth that we have seen in the fund and the value of the fund. In 2006, my understanding is that the value of the fund was at $96 billion. That's at least according to the CBC News. It's now well over $400 billion. One of the reasons that's been pointed to is the global focus that has taken shape over that time. We have, and as you mentioned in your presentation, 9 offices globally, 2 in the US, 2 in Europe, 2 in Asia, 1 in Brazil, 1 in Australia. You talked about the 1,800 plus employees that normally would have been stationed in those offices around the world. You said that they are now working from home. To what extent is this limiting the ability of the CPPIB to carry out its work and to grow that value even higher? Or is it limiting it at all? Will these employees end up staying at home? Any thoughts on that?
Yeah, it's a great question about how we run the operations now. We all hope this is over sooner rather than later, but if it's not, and we still have to operate on this basis, we can, and we can operate safely, and we can run our process and run the portfolio and run all the risk systems, etc. I think where it limits things is people flying in and flying out of countries, and I'm very grateful for the fact that we have people in these countries because it's going to be very challenging if you don't have people on the ground in these countries and you're trying to fly people in and out to look at your assets, examine issues that are arising in those assets, or to make new investments. So the fact we have people in Australia, in India, in the US means that in South America, it means that we're not going to have the problems of people not being able to fly in and out, or massive quarantine periods, or in both ends, or all the risks that people are going to have to undertake. If they're in country, then they can look after our assets and look after the risks, and find new opportunities because we have the offices there. So I'm quite grateful that we do have that footprint in place.
Thank you very much.
Thank you substantially over to as well, Peter. We'll go to Mr. Cumming and then on to Mr. Fraser. James?
Great. Thank you, Mr. Chair, and thank you for appearing today and your candid responses to the questions that have been put in front of you and meeting prior to this meeting. I appreciate very much the responses you gave me at that time as well. So net return 3.1%, as we all know, tough last quarter, COVID related. With the direct investments that you're doing, which have become a more significant part of the portfolio, do you think it's fairly factored in the impact on those direct investments and those companies that have been impacted by COVID, because they wouldn't line up with your year end and certainly you have to do some adjustments. Can you comment on that?
Yeah, that's a terrific question. I think one of the things I did when I sat in my seat as CEO about 4 years ago was focus on our private market valuations. We have pretty good private market valuations, some private asset valuations, but we wanted to make sure they were world class. So when my chief finance and risk officer, Neil Beaumont, arrived, I shortly after hired, we sat down and said, okay, we're going to make this approach really world class. And so we're going to make sure that we have independent teams of valuers who are incredibly rigorous. They have the call, they have the pen. The investment teams don't have the call, and that we have an incredibly rigorous and much more regular approach to private asset valuations. Because I didn't know something dramatic would happen on my watch, but both of us looked at each other and thought the chances are with this expanded recovery, it probably will happen on both of our watch. And so we wanted to be prepared for it. In fact, again, super lucky. If you go to our website, we put up, I think on the 24th of January, Neil Beaumont put up an interactive video showing how we do our private asset valuations and how we improved. And this was the approach. We didn't know we were about to hit a massive market event and be able to test that process, but super glad we did, and super glad we put it out for the public to understand how we were doing that approach. So we took as we came in through this and we sat at year end, we took a really, really hard look, and we took some really tough marks on the valuation of our private assets. So they really do represent the value of those assets at that point in the market. They're a true representation of the value of those assets, whether it's private equity assets or real estate assets or infrastructure assets. And there were some tough conversations, obviously, with investment teams who believed in the long-term value of these assets, but we wanted to make sure they were truly right. And then we have an independent audit approach that comes in and makes sure and goes through a very large number of those assets again, and they do their work and make sure that those really are robust valuations. And we were quite satisfied with the fact that we had been. My chief finance and risk officer won't like me saying we were conservative on it, but I think because he'd say we got the right valuations.
Nothing wrong with that.
But I think we got the right valuations. So.
Okay. So are you seeing, given what's happened in the last 3 months with those private investments, are you starting to see interest in those companies because there's liquidity issues to looking for additional investment from you, whether it be through debt instruments or equity instruments? Or have you started to see that? And is that something that you're going after if it looks like it's the right circumstance?
Absolutely, we will go after if it's the right circumstance, and that's the key. So we will look at each of them based on the merits, the risk and return characteristics, and the opportunities. And we're also we stress test the portfolio across all the private assets to look at, and the significant public holdings we have to look at. Will we need to put more capital in, and to make sure that we have reserved significant liquidity for that potential potential event. So this is a very rigorous event. We have a team called Portfolio Value Creation that is working with the investment teams to go through the plans, the liquidity profiles and capital needs of those companies, working with partners where we have partners, working with the management teams to make sure that we've thought through exactly that. So even if there's a prolonged economic stress here, what do the companies do? But we'll only put money in if we think there's a good opportunity on a risk-adjusted basis.
We will have to move on. Mr. Fraser will be followed by Mr. Barcelou Duval. Sean.
Thank you very much, Mr. Chair. Thank you to our witnesses for being here. This has been very engaging testimony to date. Look, I'll start with a question based on the place where I gain half of the lessons I've learned since I entered politics, and that's at a table in Tim Hortons. This one at the town of Pictou, where a local resident who was interested in the CPP and giving me political advice, saying what the federal government ought to do if they want it to try to win some votes, not that that's what it's about, is to bump up benefits for seniors. They pointed specifically to the CPP because it had a history for quite a few years of having higher earnings than payouts. But I have some concerns around Canada's demographics and the fact that in my home province in Nova Scotia, we've got an aging population as significant as anywhere else, although it's a problem right across the world and certainly within Canada. I'm curious if our witness can shed some light on whether the Canada Pension Plan is sustainable in its current form, and if in fact the lessons I pulled at Tim Hortons are valuable, and whether it's doing so well that we could actually afford an increase in the CPP to help seniors living in retirement.
Yeah, so I would say a couple of things, and I think this is one that Michelle Leduc may want to add a little bit on. So on demographics, Canada has an aging population, somewhat offset by net immigration, but it is a challenge for the country and for the fund. The chief actuary models that in, and models in expectations for demographics and the aging of the population, birth rates, death rates, etc., and longevity rates. And the fund is sustainable under the chief actuary's assumptions. And so that is all factored into the sustainability of the fund in the latest report. With whether you as the stewards, the federal and provincial stewards of the fund decide that you want to adjust benefits, then it's something that certainly is within your purview to do that. Our job is to invest the money that we get and to make sure. Ideally, we give you that flexibility over time by making sure that the returns exceed the expectations set by the chief actuary. We work extremely hard every day to try and give you that flexibility over time.
Well, I want to talk about one of the sectors that I think does have potential to give that potentially increased flexibility. I think one of the disappointments I have about some of these conversations when it touches on the green economy, it often does turn into an ideological battle about the energy industry. I think, to me, there's a separate conversation to be had about separate and apart from whatever climate ideology a person may have. I personally believe we need to be more and more aggressive in terms of our fight against climate change. But I'm actually curious from a pure economic perspective. Do you think that the future in the green economy, which will certainly provide certain returns in terms of our emissions reduction, but if we're dealing it in terms of crass economics, where do you see the future of the CPPIB in terms of its investment in the green economy, in terms of giving that kind of flexibility by capitalizing on a global opportunity in an emerging sector?
Yeah, so we have a rapidly expanding investment portfolio in renewable energy. So we've been investing in it. We've had a dedicated team since 2018. So we've invested around the world, whether it's in wind, whether it's in solar, whether it's in hydro, and we continue to do so. So, for example, in the last few months, we continue to invest. We created a joint venture with Enbridge in Europe for offshore wind. We continue to put money into that, and importantly, we made our largest acquisition to date in renewables in Pattern Energy, which was a $6 billion company focused on North America and Japanese wind and renewable assets, and we bought that in the last couple of months. So we're substantially ramping up our investments in these areas, and we think they stand in many cases, in all cases that we make, they stand on their own 2 feet in terms of returns. So we like the risk-adjusted returns in wind and solar. It's not just wind and solar and hydro, but we're also focused on innovative areas. So we have a group that's dedicated on looking for innovation in the energy transition, and has made a number of investments, for example, in charging, a company called ChargePoint that is putting electric vehicle charge points in place around the world. And then I might highlight one of the investments, because it just came online, that we made a couple of years ago, in Alberta, which is the Alberta Carbon Trunk Line, which we invested in, and that is a carbon capture project, which is now switched on in the last couple of days of full capacity. It will be extracting about 15 million tons of carbon a year, which is the equivalent to taking almost all the cars in Alberta off the road once it's up and running at full capacity. So, and we're quite excited about that area and looking for more opportunities.
So I may revisit this, but I expect I only have time for one quick question. Is that fair, Mr. Chair?
Yeah, you really don't, but we'll give it to you. We've been doing it for everybody else.
Okay. Well, look, thank you. I'll explore that another time. The one quick one I'll squeeze in is to say you highlighted some of the short-term concerns around the changing social circumstances in which we find themselves in response to Ms. Katrakis. Are there longer-term trends that the organization is focusing on as a result of this pandemic, whether it's a work from home, whether it's production of personal protective equipment, or any other significant social change in the way we live or work that you're targeting to maximize long-term returns in the money that you really hold for the benefit of Canadians' retirement security?
Yeah, I mean, look, it's a really, really important question, one that we have teams working across our fund on trying to identify those trends, so that not just the shorter term trends, but the longer term trends. I mean, we do think some things, before I give a few more examples, I mean, we do think some of these trends will come back over time. So I don't think travel is travel and hospitality over. I don't think sporting events are over. Even things like movie theaters, which in some ways are somewhat irrational. We're social beings. We are we've seen time and again that while people can comfortably watch movies at home, comfortably eat at home, we all want to go out to the noisy restaurant because it has buzz. We want to go and sit in a movie theater and share an experience with a bunch of people we're never going to talk to, but because there's more buzz by doing that, or maybe there's slightly better screen, etc. So I think a number of these things that rationally maybe shouldn't come, they're going to come back in my personal view. And there may be some terrific opportunities there in those sectors that there have been. We'll see. Markets have anticipated a number of these. We've seen, for example, the cruise line companies come back, incredibly strongly since March 31st. But it's going to take a time for the traffic there to pick up. So I'd say a number of things that we do think will pick up over time, other than data centers, telemedicine, fintech, online. I think things like online grocery ordering, I think, is something that really it's really only been limited by capacity. I think probably quite a few of us who've tried to get capacity for online ordering of groceries have been frustrated by the fact you just can't get it. I think where it's been available, it's increased up to capacity, and I think that's likely to continue. That people will continue to try and order online. I do think, as to your point, the flexibility on location of staff, I think will continue to stick. I think there will be more flexibility for people who have particular skills, who have particular expertise, that they don't need to keep flying in and out of places or participating, via long commutes. So I do think there'll be more flexibility, and I do hope that's the case, because it will bring a lot more people, smart people who've moved away from the typical center into the knowledge workforce. So I hope that will happen as well.
Thank you. You're welcome. I'll lay out the next questioners. Mr. Barceló Duval will have 2 minutes, Mr. Julian the same, and then we'll go on to Mr. Morantz and Mr. Zerowitz. Before I do that, partly spinning off of Sean's question, I do have one on a question on the oil and gas industry, because I do see our oil and gas industry constantly under attack. And I believe what we're seeing happening in Canada is we're driving capital investment out of the country. We're driving human resources out of the country. We're driving innovation and knowledge out of the country, while at the same time the oil and gas industry is expanding elsewhere. And so we're not using our natural resource to transition the benefits of that natural resource to transition to a green economy. We had a meeting this morning with the oil and gas industry in Newfoundland, and what they told us is there's 17 new finds in Norway. The investment isn't coming into the offshore industry in Newfoundland, and as a result, the working vessels, etc., are leaving Newfoundland and going to Norway. So my question really to you is, some of that there's lots of politics around this, I know, but are you seeing, what are you seeing in terms of the global investment in the oil and gas industry? Is it increasing in other parts of the world, and are we the only ones driving it away?
I think, I think, as I said earlier, I think we're believers in climate change. Climate change is happening. We believe in the energy transit. The energy transition will be underway towards a low carbon economy over time. However, even the most optimistic people, even the most optimistic projections, whether we like it or not, see a significant role for traditional energy for quite a while to go. So if I take, for example, the IEA's projections for the energy transition, the most optimistic projection that they have is by 2040, you've still got 58% of the world's energy supply being provided by traditional energy. And so that is, now, I think, probably that's not consistent with a great climate outcome. So there's going to have to be even more innovation there, whether it's carbon capture or other approaches or more rapid transition. But there's clearly a role for traditional energy, for airplanes to fly and for other things that is very difficult to innovate around. And so, so we see that there will be investment in the traditional oil and gas industry for a period of time. I'm not sure that there is a huge surge in investment right now. I think it is a challenged industry given where prices went. They had the double whammy of during COVID. They not only had the COVID pandemic and a complete dry up in demand, but they also had this huge spat between Saudi Arabia and Russia, which caused a massive crash in the price. And so they were under just very, very, very significant stress at that point. And I think I feel for the people who are in that industry who've been really challenged during this time. But they've got a long track record of battling back.
Okay, thank you, Mr. Barceló Duval. 2 minutes.
Thank you very much, Chair. Am I coming across clearly? Okay, thank you. Thank you. I note that in the geographic spread of the investments, 2006, 64% of your investments were in Canada. Into 2020, 15.6 or 7% in Canada. That's a very steep decline as a percentage. I know that you're working diligently on diversification, but when we invest a lot abroad, you have to be very cognizant of this the details of those markets. And of course, you are by nature risk adverse, which is a good thing. I'm wondering why you have gone away from Canada. How come we're not investing or investing a lot less in Canada? I'm, of course, interested in Quebec, and I want the Quebec economy to go well. So is it because the Canadian economy considered a higher risk or not diversified enough, or there's not much confidence in the Canadian economy? Or can you give us a range of comparison, if you will, between the investment in Quebec as compared to the rest of Canada?
Very, very happy to. So we have, as of the fiscal year end, 15.6% of the fund invested in Canada, or about $63.9 billion. One of the purposes of the fund, as originally set up, was to diversify the portfolio into a global portfolio. So clearly, when we started, we had 100%. What we inherited from our predecessor fund, the fund was 100% domestic investment in Canada. And so we've been diversifying that gradually around the world where we find good opportunities. Having said that, we have substantial investment in Canada. We will continue to have substantial investment in Canada. It's our home market. We understand the risks here. But we are massively overweight versus any proportion, any measure of Canada's weight, and from a global GDP perspective, which is around 2%, from a global equity market perspective, which I think is around 2.6% of global equity markets, et cetera. So having 15.6% versus 2-something% is massively overweight Canada. So we're quite comfortable with that. We probably will remain overweight for quite a while. In terms of Quebec, we have over $4 billion invested in Quebec across equities and real assets and bonds, and we continue to look for great opportunities in Quebec and in other provinces, and we continue to look at some of the really vibrant companies in Quebec.
Okay, thank you, Mr. Julian. Couple of minutes.
Thanks very much to our guests, and appreciate your frank answers. I have two questions. First, what are the investments, sum total of the investments, CPP IB in tobacco companies, private pensions, and weapons manufacturers? I know that's been an issue that has arisen in the past. You've divested from at least 2 private prisons. So I'd like to know what the existing investments are. And secondly, there has been a mention about the CPP pushing for more diversity on the boards in companies in which they have investments. And I noticed the interesting phrase that the CPP will not vote for managing directors if the board has no women directors and where no exception is warranted. Could you explain what the exception is? And I don't see any reference to people of color, Indigenous peoples on corporate boards. That's, of course, a big problem in Canada. Is that an intent of the CPPIB to weigh in to assure that Canada's corporations have more diversity on their board of directors?
Okay, thank you. I'm going to let Michel answer the first question. It's very much in his purview, and then I'll answer the second.
Mr. Leduc.
Great, thank you. On our exposures to a wide variety of different types of companies you mentioned, for example, tobacco, as well in the U.S., there are some detention centers that are privately run. So as part of our efforts to widely diversify the fund, not only geographically, but by asset, some segments of our businesses, some of our investment strategies efficiently apply indices. And so what that means is to gain added exposures, we might put part of the fund in something that would mirror, say, the S&P 500. In doing so, we would then capture some of these types of assets that you referred to. What's come to to the fore for us is, even though individually these are very tiny exposures for the CPP fund in the context of a $400 billion plus, some of these may be $1 or $2 million because they're spread out across about 4,000 holdings. What we found is, even though we've had a very robust due diligence process on the wide variety of risks that would come our way when we make a direct investment in a specific company, a much larger position, we found that there could be some exaggerated risks, even if it's a small holding. So what we did is we've applied the learnings from the processes we've had in looking at large positions. We found tools that are able to identify where there could be exaggerated sources of risk, whether they're controversy risk, whether they're social or governance or environmental risks. When those are flagged to us, then we're able to, even though there could be thousands, we're able to narrow them down to a few. Then we're able to apply our more rigorous, detailed assessment. In some of those cases, it's turned out that we were not comfortable with the wide range of risks. And in that case, the example that you provided around detention centers would be one of them. There is, in a situation where we've also looked around tobacco companies, while we don't take, by virtue of our mandate, we don't have broad sectoral, broad brush exclusions. So it is not consistent with the CPPIB Act to say, we will not invest in tobacco, full stop. Having said that, it does allow us to take an idiosyncratic view if there's a particular tobacco company that is behaving in a certain way, which increases, for example, its legal risks, then we are given the opportunity to do a deeper dive. And there have been instances where we were not comfortable. At the end of all this processes, the one thing that stands consistent is being true to the legislative mandate of making sure that when we are taking a position for the long-term returns, that we're also equally looking at the long-term risks associated with those. I think, yeah.
Mr. Chair, but the other question on
Julie, Peter, we're way over. Mr. Machin, if you can hold it down to about a minute. I've got three other questioners got to get on.
Okay. Well, I will try in a minute. It's a huge question, really important question. Board effectiveness. So we have page 48 onwards in our sustainable investing report, which is online, goes through all the reasons around why we think this is a really important issue for company performance, that they do have gender diversity, and we've analyzed it. We've analyzed this from a quantitative point of view. We've done meta-analysis, we've done our own quant portfolios, and we believe this is a real issue. And so therefore we began voting against this a couple of years ago in Canada. We've extended it out across the world. And we've been pretty pleased. I mean, it has been a real success, not just us, but all the movements. It's just terrific to see that there has been real progress made in Canada. So as of December, 30.4% of TSX 60 board members were women. In the TSX composite, 27.6% are women. So there's been progress that's made. You could argue not full progress, but it's still terrific. And we hope that continues around the world. To the specific question, what excuses will we accept? Then it's not an excuse that, oh, we can't find anyone, or, oh, there's no expertise in this sector or anything like it. It may be that there's going to be a particular board limits, and there'll be turnover in a year or two's time, and therefore they're looking, and they've got their eyes on doing it at that point, and it's just impractical for them to do it that year. But for example, we're not taking the weak excuses as an answer.
Okay, thank you, Mr. Morantz, followed by Ms. Zerowitz. We'll split with Mr. McLeod. Mr. Morantz.
Thank you, Mr. Chair. I don't have a lot of questions. We covered a lot of really good ground today, but I did want to ask about the increase in the employer-employee contributions. I don't think we've touched on that yet that I recall anyway. They've gone up from 2018 to now by about 30 basis points, from 495 to 525. I'm wondering if you could just describe the reason why, and if you anticipate that this is a trend now that we'll be seeing regular increases in this. For years it was at 495 and was stable at that rate.
Yeah, so I mean, I think that refers to the reform and the legislation that was passed in 2016, 2017 for the additional CPP. And so there was a decision taken by provincial and federal government ministers back then, and legislation was passed to increase the contribution rates. And so those will gradually increase both the rate of the contribution required on the earnings covered by the CPP, and then the upper limit on the covered earnings. And that upper limit increases between 2023 and 2025. So it's been gradually phased in over that time period. Our job is to manage the money that comes from that, and we describe again in the annual report on page 20 onwards how we do that and how we're investing.
I understand that. So these increases, were they were legislated? Were they based on actuarial advice, though?
I would have to. I would presume so. I would presume that that was the case, but it's not. Again, it's not. It's not our realm to get into the policy changes. It's our realm to invest the money that comes to us. And I mean, clearly, there's an increased benefit that comes from that increased contribution. So I think the goal is over time that the maximum benefits will rise from about 25% of pensionable earnings to 33% of pensionable earnings once this all plays through over time.
And just in the interest of time, I was curious about the rate of return. The Canadian dollars have been declining. It's gone up a little bit lately, but it's weakened significantly over the last, if you go back to 2012, I think it was at par. When you're calculating your rate of return overall year to year, do you take into account the value of your foreign assets vis-a-vis the value of the Canadian dollar?
Yeah, so that is one of the benefits of diversifying the portfolio globally. Is that hedge, if you will. So when the Canadian economy is being hit hard on a relative basis, the foreign assets to some extent will be valued high, and vice versa. When the Canadian economy is doing well and contributions and employment are high, it offsets any relative weakness from the international economy. So it's one of the reasons why we don't hedge the exposure to foreign currencies, and because we think there's a natural hedge there in terms of the contributions versus where the portfolio is based. So that's one of the things we think about.
Okay, thank you.
Thank you, Mr. Morantz. Then turning to Ms. Zerowitz will be followed by Mr. McLeod. Go ahead, Julie.
Perfect. Thank you so much, Mr. Chair. I just want to say huge thanks to you, Mr. Mackin, and to your team for your excellent work in managing what I believe, and I think most agree, is a best-in-class and an excellently run pension fund in the world. So I just want to say huge thanks to you. You've done a wonderful job in responding to a wide range of questions today, and most of my original questions were actually asked. But there's one area I want to delve a little bit more into. It's, the chair raised, I think, some very important questions around oil and gas companies and investment. I think you provided a wonderful response around the fact that we're going to need some of the traditional oil for many, many years to come. But climate change still is happening. And all companies the world will be looking at all companies to be looking to be reducing their emissions. So what I want to do is just, Mark Carney, he's as you know, a recent former Bank of England governor, he in one of his last speeches said companies and industries that are not moving towards zero carbon emissions will be punished by investors and go bankrupt. And so my question to you is, and I know you've mentioned that for every company that CPPIB invests in, they have to show that they are disclosing risks posed by climate change to their business. But do you think that we also have to start moving towards asking businesses to show plans on how they're moving towards zero carbon emissions?
Yeah, thank you for the question. Thank you for the kind comments at the beginning, and I'll accept them on behalf of my 1,800 colleagues who do all the hard work. But really appreciate it. Yeah, so so with respect to Mark Carney and his work on climate, we were one of only 2 pension funds involved in the task force for climate-related disclosure, which has been chaired by Michael Bloomberg, and the purpose of that is to make sure, as you say, that we really understand what the risks are in our portfolio, because otherwise it's extremely hard when you have thousands of company positions to really understand what we own in the portfolio and what the risks are. And so that's something that has been extremely helpful as more and more companies are adopting these standards, and we're also adopting the standards ourselves. With respect to moving towards requirements for people to move to zero emissions, I think it's possible that that's something that people will require over time. I know the UK government has moved to being carbon neutral by 2050. I think an increasing number of governments are moving towards that type of scenario, and I think energy companies generally around the world do see that this transition is happening. They want to be ahead of it in many cases. And I think so. One of the things that Mark Carney has said is just be careful about cutting off funding to these companies when they are actually funding transition. It's all very well to exclude everything from your portfolio, but then you end up not actually funding the transition. Whereas some of these companies are real experts in this area and can actually can make massive investments in renewable power and manage that transition. So that's certainly something that we see around the world. I mean, I gave the example earlier of our joint venture with Enbridge, for example, in Europe called Maple Power, where we together are making very substantial investments in offshore wind in Europe, and we're very happy with that relationship and those investments.
Thank you. Thank you both. Last question, Mr. McLeod. Michael. Whoop. Yep.
Yeah, thank you, Mr. Chairman, and thank you to the witnesses for appearing. Very interesting information. I also want to thank them for their engagement with northern governments. I think that's really good to see, and people are quite happy to have that discussion with them and making themselves available. On the Indigenous hire, I'm not satisfied that the numbers are where they should be, but you're working at it and you have good programs in place, and that's all I can ask. The biggest piece, I guess, that everybody wanted to hear is that the fund is sound, secure. It's interesting to see how the fund was doing in December, how well it was doing in December, and watching how things have affected investment during the pandemic and the ability to bounce back. My question to you is, has the employment situation, the great employment numbers that we were seeing helped? Has that impacted how the investment has been doing before and now?
Well, thank you. I'll say one quick thing on the territories, because it is something that I was thrilled to get to up to the Yukon earlier this year, and we have 88,000 residents in the territories who serve as contributors and beneficiaries. So we see that as important. I was disappointed because I was hoping to get to the Arctic Indigenous Investment Conference in June in Nunavut. Hopefully next year. But it's it was terrific to make that meeting to the Yukon and to meet with a number of Indigenous leaders and to speak at the Yukon College School of Business and Leadership. So we're working as hard as we can to increase the number of Indigenous employees that we have. With respect to sorry, I forget. I've forgotten your main question. I apologize.
My main question was around employment numbers.
Yes, the employment number. Sorry,
in,
yeah, the employment number. So the employment number at the moment, the employment number has, we're anticipating it will have a significant impact on the inflows into the fund. So we're still, but based on our modeling, we expect a very small inflow into the fund this year, and then it picks up rapidly after that. But we do hope, as the employment numbers improve here, it's certainly gone from what could have been a reasonably significant outflow from the fund this year to a very, very modest inflow to the fund based on the latest employment numbers. So it is much more promising than we had previously anticipated. It's still down from what, obviously, based on what we had previously anticipated the flows into the fund would be, but we do see a rapid rebound in the next year.
But the fund, could I just ask one more quick question?
We're over, but go ahead.
Yeah, you mentioned the fund was doing well in December. That was a record high, right? How the fund was doing. I thought it was the best in 20 years.
Yeah. Well, the 12.6% return would not. That wouldn't be a record. We've had higher percentage returns for for particular years. We've had over 18% in at least one fiscal year, but it was a very strong year. 12.6% is not. I'd love to say expect that in the future, but that would be a little optimistic.
Okay, we are going to have to end it there. The minister's on the next panel, and we really don't want to keep him waiting. Look, many members thanked you for your candid responses, and I can tell you, not all witnesses get that kind of a reaction from members on this committee. So we certainly thank you, and through you, we want to thank all your teams and all your staff for the work that you do. I think your performance record in your report and what you stated today speaks for itself, and I think Canadians can be proud of the work that the Canadian Pension Plan Investment Board does. So with that, thank you again to you both, Mr. Leduc and Mr. Machin. Hopefully next time we get to meet in person. We are living in interesting times. So thank you very much. And with that, we will suspend the meeting for about 2 minutes while the staff bring the other witnesses online. So meeting is suspended. Thank you.
Thank you, Mr. Chair. Thank you.
response to the COVID-19 pandemic, and we'll be having the minister today, and the biweekly report has been sent to the committee. With the minister as well is the Canadian Development Investment Corporation, Canada Revenue Agency, Department of Employment and Social Development, Department of Finance, and Global Affairs Canada. I couldn't help but think when we were going through the testing, all those earphones that have been sent out to representatives. We just had the Canada Pension Plan Investment Board on before. I hope they invest in the company that sell these earphones, because there's a lot of them going out. Minister, welcome. Great to see you in person, at least on the screen. Thank you for coming, and the floor is yours.
Well, thank you, Mr. Chair. Before I begin, I'd like to once again thank the members of the committee for their continued work during this particularly challenging period for all of us. The pandemic continues, obviously, to have serious economic impacts across Canada. For many Canadians, the pandemic has brought about unprecedented uncertainty. Uncertainty about their jobs and their financial security, uncertainty about making ends meet. Today marks 3 months since the Prime Minister announced the first elements of Canada's COVID-19 response plan. From the very beginning, we've maintained an unwavering commitment to supporting Canadian households and businesses. We've rolled out measures for workers and businesses across all sectors, for employers of all sizes. We've worked and are continuing to work closely with local, provincial, territorial, and Indigenous partners to minimize the health, economic, and social impacts of COVID-19. So now, 3 months into the crisis, there are some encouraging signs in Canada that the spread of the virus is slowing down. Many provinces and territories in Canada are beginning to cautiously reopen their economies, something that the finance ministers are telling me in my weekly calls is beginning really across the country. But we're not out of the woods yet. COVID-19 continues to pose significant risks to Canadians and, of course, to our economy. C'est pourquoi notre
That is why our government is continuing to take measures to reduce the impact of COVID-19, but our goals remain the same: to protect Canadians, to support workers and businesses in our country, and to help our communities to ensure that Canada will be ready when it's time to come out of the crisis. I would like to highlight some of the measures that we have recently announced. At the beginning of the month, the Prime Minister announced that the funding given with the gas tax fund would be affected this year. This is a permanent source of funding that from the provinces and territories, which provides sums to support different local priorities. Normally, the money is transferred to those areas. We then deal with it a few months later. But we do know that the municipalities need the money right now to be able to cope with the COVID-19 crisis.
2 weeks, $2.2 billion from the federal gas tax fund will go to Canadian municipalities. Money that will help municipalities move forward with infrastructure projects that will improve quality of life and help restart local economies and create good jobs. We understand that more will be needed to help municipalities, as many are facing significant COVID-19 related financial pressures. But we know this is an important first step. We'll keep working with provinces and territories in order to help support municipalities.
While the provinces and territories are gradually reopening their economy, our absolute priority is the protection of the health of Canadians. This is why we have undertaken negotiations with our provincial and territorial counterparts to ensure that each reopening will be done with Canadians' health uppermost in mind. and to minimize risk. We will work with the territories and provinces so that Canadians will all have a certain number of paid sick leave days. That if they feel that they have symptoms of COVID-19, they will access that. And we will be able to access provide equipment throughout the country, like surgical masks and other types of equipment that will help us track COVID-19.
With our provincial counterparts to make sure Canadians can safely get back to work will also be focused on the following areas: testing and contact tracing, making sure there's protective personal equipment so Canadians are safe on the job, support for childcare, support for vulnerable people like those in long-term care facilities, and support for cities and municipalities. We know that we all need to work together. Throughout the pandemic, one thing has been clear. We've all been touched by this crisis. Last week, the Prime Minister announced that seniors eligible for old age security and the guaranteed income supplement will receive their special one-time tax-free payment during the week of July 6th. Seniors eligible for the OAS pension will receive a payment of $300. Those eligible for the GIS, who are the most vulnerable, will receive an additional $200. The pandemic has also heightened and highlighted the additional challenges already facing Indigenous peoples in our country. We're working with First Nations, Inuit, and Métis communities to address their specific needs. Since we last met, our government has announced additional funding to support Indigenous peoples. This includes an additional $75 million in support for organizations that provide services to Indigenous peoples in urban centers and off-reserve, and nearly $650 million to support Indigenous communities on healthcare, income support, and new shelters for women. This builds on measures already announced to support the public health response in Indigenous communities, as well as the support to Indigenous businesses and Aboriginal financial institutions. The
measures for Canadians that were recently announced and that I have just reiterated will be added to other measures that we will continue to improve. For example, the emergency fund for the Canada Emergency Wage Subsidy was extended to August 29, and also there were consultations with representations and various not-for-profit organizations and charities. We want to see what further things can be done to perfect the program. There are 2.6 million Canadians that will be able to keep their jobs.
The key objectives of any potential changes to the Canada Emergency Wage Subsidy will be to maximize employment, to ensure that the program meets and reflects the immediate needs of employers, and to support the post-crisis economic recovery. Overall, our government's swift and comprehensive actions through the COVID-19 economic response plan is providing more than $150 billion in direct support to Canadians. This, coupled with liquidity support of $85 billion through tax and duty deferrals, represents support equivalent to more than 10% of our GDP. This has put Canada at the forefront of our international peers in terms of the robustness of our response. We've done this because we believe that by investing in Canadians now, we stand well prepared for success in the economic recovery to come. While there's reason to be optimistic, we must all continue to take precautions to control the spread of the virus. As provinces, territories, municipalities, and businesses begin to gradually reopen, we'll stand ready to support them to make sure that Canadians remain safe and supported. Our government will be there with Canadians every step of the way. So, Mr. Chair, il me fait un plaisir de répondre à vos questions.
I'm happy to answer any questions you may have.
Thank you very much, Minister, and thank you for the work that you and your team do. We know you have to be tired. There've been long days and short nights for you folks, I expect. So thank you for your efforts. I'll lay out the minister's a hard stop at 7:15 6:15 your time, I guess.
Whoa, you almost got me there.
Yeah, 6:15 your time, hard stop. So we'll go to 5-minute rounds. We'll go start with Mr. Cumming, Mr. McLeod, Mr. St. Marie, Mr. Julian, Mr. Cooper, and Ms. Zerowitz, and that will end it. Mr. Cumming, floor is yours.
Well, thank you, Mr. Chair, and thank you, Mr. Minister, for appearing again in front of us today. You know, in my 30-some years in the private sector, dealing with uncertain times, and many of them, was always able to produce some kind of a budget or a forecast. In fact, I just found out that Parliament has always received a budget or a forecast in the last 100 years. Can you tell us today when we can expect an economic forecast or a budget?
Well, thank you for the question. And I completely appreciate and understand the importance of continuing to provide information to Parliament and to Canadians. The report, the bi-weekly report that you received in contemplation of this meeting, of course, details all of the measures that we've put forward. And what we are working to do is to make sure that we keep updating that so people have a very good understanding of the measures we put forward. And of course, we do intend on giving a better understanding of our economic base, and that will be able to be done as the economy gets more stable and as we get into a better position to make those understandings well known to Canadians.
We're asking businesses to forecast their revenues to be able to apply for programs. We're asking them to deal with their spending and be able to understand how their businesses are operating. You've got a very talented crew here that are on this call with you today. When can that team put together a full forecast or a full budget so that people can see exactly where we're going and get some certainty about what's going to happen in the future?
Well, I think the challenge that we're all facing is that we are looking for certainty at a time where it's very difficult to deliver certainty. You will have seen this week that the OECD put out a forecast, but in fact, what they said is they couldn't give us a forecast, so they gave out two separate scenarios. So what we're going to continue to do is to deliver for you and for Canadians an understanding of the investments. And as the situation is stable enough to provide better and more comprehensive information, we will be coming forward with that information.
You said that you're still looking at changes to the wage subsidy to better serve the businesses that are out there. And I spoke to a company today, Canadian Benefit Providers, who they they're paid, they have a flow through on the insurance costs, but they really get paid through an administration fee. So their top end revenue has stayed quite high, but of course their administrative fees have gone way down. And so overall the revenues have not gone down enough to apply for Qs. Strikes me, massive payroll, great company, but they're falling through the cracks. Is that something that your department will look at trying to revise?
Well, first of all, I appreciate you providing that input from that company. We've been trying to get insights from businesses and from participants in the economy from across the country. And we have had, among the many recommendations or ideas, a suggestion that for some businesses, the revenue cutoff at 30% puts them at one side or the other of that line. So that's something we've heard. It's something that we are certainly considering as we think about next steps on the wage subsidy. And I'm hopeful we'll have more information on that in the near future.
The oil and gas sector continues to wait. I see on the BDC site, there's still the details for that program have yet to be announced. It was supposed to be days, then it became weeks. Now it comes into months. As you know, and I know you're fully aware of the struggles in that sector. When can they expect the details to be announced?
Well, thank you for that. We've been trying to support the energy sector, in fact, all sectors with access to financing across the country. Obviously, the emergency business account has gone out across the country to small businesses. That's been very successful. The BCAP program that was specifically designed for the energy sector, the final terms and conditions, I understand, are almost ready. We wanted to make sure, and they wanted to make sure, that the reserve-based lending approach that's so important for that sector was appropriately tailored. So I'm encouraged to hear that is imminent. And of course, the large enterprise emergency financing is open, and we are seeing firms come forward to that as well. So I'm pleased that we're moving forward on all these fronts.
Minister,
Last question, James.
On the CEBA program, there was announcements for changes to that were announced several weeks ago. It still hasn't been executed on, and specifically with personal checking accounts, that still hasn't been executed on. When can we announce to small businesses these changes will be in place so they can access those funds that they desperately need?
Well, I thank you for that question. I mean, first of all, I think we need to acknowledge how successful this program has been in getting support out to small businesses with more than 650,000 loans. So that's very important. Of course, the EDC has said that there will be an ability to enlarge the companies that are eligible, and I think that will be out in the coming days. And then there will be additional facilities through the regional development agencies. So we are expanding the range of businesses. As we've said, it is imminent, and we're very, very pleased to see that the support has gone to such a broad range of businesses across the country.
Thank you both. And James, on the personal banking account, I have the same concern, but I have sent people to the regional development agencies, and it has went through on the personal banking account there. Just a point of information for you, Mr. McLeod.
Thank you, Mr. Chair, and thank you to the Minister for appearing once again in front of us. I also want to say thank you to the Minister and his cabinet colleagues for providing very good communications with the government of Northwest Territories and other northern governments. And I'm also very happy to report that we've had no cases of COVID-19 for over a month now, and our territories are beginning to safely reopen. However, the economic picture is not as positive. There's a lot of uncertainty about jobs. And I've joined my 3 northern colleagues in the Senate, as well as many municipal, territorial, and business leaders in supporting greater flexibility for programs like the wage subsidy to reflect the unique nature of our region. So my question is the government prepared to make much needed improvements to ensure that northern businesses are able to access these emergency programs?
Well, thank you. I think that's it's an important question. We are not looking at making changes to the wage subsidy that are specific to any one sector or any one region necessarily. What we're trying to do as best we can is consider the issues around the program that have come to us through these consultations. They include a number of areas, and we're trying to reflect those areas to make sure that the support for employment and the support for businesses to get through this time is appropriate. So I suspect the kinds of issues that you're hearing have been reflected in our consultations, and I'm certainly very hopeful that businesses in northern Canada and across the country will see that our continuing support for businesses and for their employees will be a positive way for us to get through this crisis.
Well, I think in the north we have a number of challenges that the rest of the country doesn't face, and I'm hoping that as the government rolls out its recovery supports, like the $14 billion announced last week to help safely and carefully reopen the province and territorial economies, that the government and yourself would consider delivering these funds on a base plus per capita allocation, which is a lot better for us. We have small populations, we have significantly higher cost of living and doing business than the rest of Canada. So is that something you would look at? It's been done historically with other programs.
Yes, well, no, I know that, and I think that has been one way that programs have been delivered. What we're trying to do is come up with an approach that recognizes really the challenges that provinces and territories are going to face in the restart. So by definition, those challenges are going to have some element of base costs, as you probably would identify. So we're thinking about things like testing and tracing, which will require some sort of human resource capability in case there's a second wave. We are thinking about ensuring that we have the capacity in our healthcare system in case there's a second wave. So there are elements of that will be different in different parts of the country. I think that's appropriate. We're expecting to work together with the provinces and territories to get to what we hope will be an outcome that allows us to be an important partner in getting the restart done safely. And that includes in the north, where the challenges, as you say, they are different. The distance to provide health care is obviously challenging in the north. The infrastructure that might be used for testing is going to, in some cases, be more challenging. We recognize that. So there are going to be different issues in different parts of the country, and as a result, those discussions will have to be somewhat tailored to each situation.
I have more time. Okay, I got one last question. A lot of what happens in the area of job creation is going to be what we announce in the next while. We've made significant announcements in the north. A lot of these projects have not hit the ground yet. We've also announced budgets that we have not seen move forward. For example, the northern trade corridors. The money's been announced for the north. There has been no call. We don't have a call. We don't have projects identified. We are going to have to, because of our seasonal construction season and winter roads and all these things that impact the ability of doing construction, we need the calls to come out early. We still haven't seen anything on the northern trade corridors. Is that something we can see move forward fairly quick?
I think I will have to defer that question, and I'd be happy to have my colleague Minister McKenna get back on the specific nature of the funding for infrastructure. Obviously, there have been some things that have been by necessity delayed during the course of the crisis. We want to see funding move forward because that's why we put it there. So we want to see funding move forward that will enable important infrastructure to get done. That's an objective of our government that continues, and that especially in the north, I think that the economy is opened up as enough so that construction can go on. From what I hear from the finance minister in your jurisdiction, so I would think that would be an objective that we would certainly share. But I don't have any specific insights for you on whether things that haven't gotten done before are not happening for a particular reason. So, but I would be happy to have Catherine McKenna get back to you.
Okay, thank you. If we could do that, that'd be great. Mr. Saint Marie, followed by Mr. Julian. Gabriel?
Oui, merci, Monsieur le Président.
Thank you, Chairman. Thank you, Minister, for being with us today. And I would like to also greet the teams from the various departments which are with us today. This morning, I met with representatives of the arts and the scenic arts and performance arts. This is a sector which will take some time being restarted. Most workers are self-employed and will not benefit from the wage subsidy. And they ask you 3 times. 1, to recognize the importance of this creative industry. 2, extend the CERB for people who have nothing else to cling to. And 3, to add a system to the emergency income supplement for people who have less income per month.
C'est très important. Je veux commencer avec une... c'est difficile pour moi.
It's difficult for me to... Yes, sir, you are on the French channel. I know that the creative sector and the arts and performing arts sector is extremely important, and I know that these people are people working without the support of an organization, and this is why I know that the emergency benefit is very important for them, the CERB, and we want to reassure people and let them know that our intention is certainly to protect them and make sure that these people will receive enough money during the COVID-19 crisis. And I do understand that these people are in a situation of high anxiety as to receiving the benefit, and we are working hard in order to make sure that people will be protected, that businesses will be protected and individuals, and this means that the CERB and the wage subsidy and other initiatives should operate and work together for the purpose of giving that guarantee. This is the most important project for us, and I'm quite busy working on it at the moment, and let me give you my guarantee that very soon you will get additional information on this topic. Thank you indeed, Minister. And here is my next question on another topic. When you will be making more flexible the rules for the management of the emergency account, it will be important for the owner to have access to it. And there have been refusal to access, and several hundreds of them, and Quebec represent 27% of those independent companies. Therefore, it is hardly hit by this. And I do understand that there should be a high degree of control for the purpose of preventing money laundering. So here is my question, Mr. Minister. When you make rules more flexible for emergency accounts, will you allow small businesses which operate with a personal account to get in touch to receive the emergency loan, provided they do open a business account, and therefore, if they haven't it yet, will they be able to open it? Yes, one of the most important things during a crisis is to listen to people who have interesting suggestions to make. And I believe that this is a promising suggestion, and we will examine how we might perhaps widen access to companies which have the possibility of would have the possibility of receiving the CERB. As you know, we are helping already 650,000 companies with this business account, and now we want to reach out in a wider way, and I'm encouraged by the fact that next week we will be opening more accounts, emergency accounts next week, and if necessary, we will look at your suggestion, which is certainly interesting, and that we will entertain. It would be wonderful if this change could be implemented as of next week. Yes, I'll just listen to what you have to say.
A very quick question. Once again, with respect to the economic update. For a month now, we've been asking questions about it of you. You always have the same answer. Bloomberg has said that there should be something for the summer. Have you thought about July the 8th when we will be sitting in the House? And why did you inform Bloomberg before the members of Parliament? I speak with you to be sure that we have not decided exactly about the next steps because of the dynamic movement in the economy at the present time. We want to be very clear with our investments. And as I have said, we will have a more stable situation and more to say in the near future. But I don't have enough information now to give out a complete approach right now. Thank you.
Mr. Julian, followed by Mr. Cooper. Mr. Julian.
Thanks to our witnesses for being here today. We hope your families are safe and healthy. And thank you, Mr. Morneau, for coming back yet again to Finance Committee through this crisis. You've been very available, both for meetings with the finance critics, but also Finance Committee. Not always easy meetings, but we appreciate your availability and certainly your ear. So my first question is, given what we've been told by OSFI, that in terms of liquidity support, Canadian banks have received about $750 billion, access to that much liquidity support, $750 billion, and as you know, have made $5 billion in profits thus far in the pandemic. But we are hearing from small businesses that can't access credit. We're hearing from people that are seeing their lines of credit and their credit card numbers going up. There are penalties and fees being imposed by the banks, and folks are paying interest charges that, frankly, in a pandemic are unreasonable. My question is very simple. With all this largesse, $750 billion in liquidity support, why have you not imposed any requirements on the banks to actually provide support to people who are trying to survive this pandemic?
Well, thank you for your continued focus on how we can support Canadians. I would say that in fact we have pushed hard to the banking sector to support their customers, and of course that means supporting Canadians. So we worked hard to encourage the banks to get to an ability for those in challenge with their credit cards to defer their credit card payments and to take down the interest charges. And in most cases, they're now half of what they were before the pandemic. So I think that was certainly a positive step working together. I think in terms of the liquidity that we put in the market that banks can use, I'd just like to give you some statistics. According to the Bank of Canada, total business financing growth increased to 10.7% in April from 7.4% in March. Loan growth was very strong at 30%, driven by non-mortgage loans. And these figures don't include the now over 665,000 businesses got the CEBA loan. I'll also tell you that the big six banks this week reported payments deferred on $67 billion worth of loans. So, you know, Peter, Mr. Julian, I will always be working hard to push the banks to make sure that they're supporting their customers. We are absolutely expecting everyone to play a part in this challenge. The money we've put into people's hands directly, supplemented by those loan deferrals, means we've very much filled an important gap in the economy. But there is more to do, and we will be expecting all participants to do more to help us get through this.
I would say and suggest, with all of the loan guarantees being offered, that we've socialized the risk and continue to privatize the profit. But I'll move on to my next question, and that is for people with disabilities. For 1/1000th of what is being provided to Canada's big banks, every person with a disability across the country could receive a small benefit, $600, to get them weather this crisis. Now, there was a misfire with the government's announcement that it would only apply to people who have the disability tax credit. That means largely people with disabilities that have a taxable income. But the poorest of the poor among people with disabilities are not covered. And yet, within Canada Revenue Agency, you have access to those who have CPP disability, those who use alternative formats through disabled access to CRA, and as well through the T5007, access to who is getting disability supports through the provinces. Why are you not extending the benefit to every person with a disability?
Mr. Minister, that's the last question, Peter.
Let me just say, Ms. Julian, I appreciate you bringing this up. I mean, we were extremely disappointed that we were not able to move forward on the measure that was going to provide $600 to people with disabilities across the country, a very, very large number of people with disabilities.
40%.
I think you point out appropriately that there are different ways that different parts of the economy look at people with disabilities. Obviously, we came up with an approach that we thought would have a very significant impact on a very large cross section of people experiencing particular challenges. And I'm just hoping that we can get this back on track, because to me, it's unacceptable that we can't actually deliver on what we're trying to deliver for people with disabilities.
Thank you both. We're over, Peter. Turning to Mr. Cooper and Ms. Zerowitz, we'll wrap it up. Mr. Cooper.
Thank you, Mr. Chair. Thank you to the officials, and thank you, Mr. Minister, for appearing not just today, but for providing regular updates before our committee. It's appreciated and it's important. Now, I want to ask you a question about the Auditor General. Both the outgoing Auditor General and the incoming Auditor General have stated publicly that the Office of Auditor General is underfunded by approximately $11 million. As a result, performance audits have been reduced in half over the last number of years, and due to the government's COVID expenditures, nearly all non-COVID related audits will be put off this year. What is your government going to do to remedy that and provide the Auditor General with the $11 million she needs to do her job?
Well, first of all, Mr. Cooper, let me thank you for bringing up the Auditor General. I'm obviously very pleased that we've been able to appoint the new Auditor General. I think she will do a spectacular job. We know that she's got a significant experience, and I think she'll bring that experience and a fresh look at what is a very important parliamentary role. As I think you probably also know, we have increased funding for the Auditor General over the years. We've increased the number of positions in the Auditor General's office, or increased funding so they can increase the positions. I understand the number of positions that it's been increased by is 38 people. So, I think what's incumbent on us is to work together with the new Auditor General to make sure that we do ensure that the office has the requisite ability to perform the function. So I will commit that that's an ongoing goal that we have, and we'll work together with her to do that.
Well, so Mr. Minister, in light of your commitment to working with the Auditor General, when can the Office of Auditor General expect to receive the funding?
Well, I think she's now new in her role, and that is appropriately something we should work together with her on to get to the conclusion that ensures the office has the support required and the appropriate level of support to do the function.
Well, the office doesn't have sufficient support, not when performance audits have been reduced in half, not when almost all non-COVID related audits have been put off. And indeed, the outgoing Auditor General said you probably need another year to deal with the COVID related expenditures alone. So we've got a government right now that is spending $500 billion. The Auditor General is asking for $11 million. $11 million, having regard for $500 billion in spending, constitutes a rounding error. What's the holdup?
Well, first of all, we should be clear with our numbers. The numbers you're throwing around are not accurate. So we did detail the investments we're making in the pandemic in the report presented to this committee. And you're a very long way off in terms of the scope of those numbers. But I think the frame that we need to make sure that the Auditor General has the appropriate resources is an important one. I think she's been in her new role for a couple of weeks, I think, and we will be working with her to make sure that there is the appropriate level of funding for the Auditor General for the needs.
Well, your government is spending, not new spending, but $500 billion in spending, and we're talking about $11 million. I guess, Mr. Minister, the only reasonable conclusion one could reach about the refusal of your government to adequately resource the Office of Auditor General is that your government is afraid of being accountable. Having a fully resourced Auditor General shed light on mismanagement, including 20,000 unaccounted infrastructure projects, $5 billion in unaccounted infrastructure spending, a $35 billion infrastructure bank that has completed precisely zero infrastructure projects. And speaking of the failed Canada Infrastructure Bank, I will follow up with you a question that I posed to the Associate Minister of Finance when she last appeared before our committee with respect to the outgoing president of the Canada Infrastructure Bank, and that is, how much did he receive in the way of bonuses?
Well, there were a number of things wrapped up in that comment question. I think first, it's important to acknowledge that the Auditor General resources were reduced under the previous Conservative government, and we have subsequently increased them. And I think The point that I think you're making is that we should continue to work with the Auditor General to make sure that the office is appropriately resourced. And I guess I want to confirm again that we will do that. With respect to the Canada Infrastructure Bank, we think this is a very important institution that will enable us to bring more resources into the building of infrastructure across the country. That is critical. We obviously have been very pleased that we got that institution up and running. There's some projects that is already supported. There's others on the way. And there's been recently a new chair who has a particular expertise in this area that's been appointed. So this is an institution that I think will have a long-term and positive impact on our infrastructure and on our economy. And I'm looking forward to more work that they're going to be able to do in the coming days, months, and years.
And the answer to my question.
Ms. Sirowitz, you will wrap it up. Julie?
Okay, great. Thank you so much. Thank you, Mr. Chair, and thank you, Minister, for being here today. I was running through the sixth report of the Department of Finance. It's 36 pages, and it's remarkable. It's very thorough, and it reminds us about how much work has actually been done over the last 3 months. It truly is a testament to the hard work, the extraordinary work of yourself, your team, and the Department of Finance. So I want to say huge thanks to you. My first question is regarding childcare. We had an economist come before the committee last week, and she told us that there's going to be no economic recovery if we don't figure out how we're going to support childcare, because women will not be going back to work if we do not find a way to support childcare. She talked to us about household spending accounting for over 56% of the GDP, and how women's incomes are critical to maintaining household purchasing power. So my question to you is, what approach are we looking at in order to support childcare and ensuring maximum women's participation in the workforce moving forward?
Well, thanks very much for the question. I think, as you know, we've embarked on these discussions with the provinces. We've put $14 billion on the table that we believe will be important for a safe restart. And for us, a safe restart, I think, means what it means to Canadians. We need to be able to get back to work in a safe and way that gives us confidence. Clearly, we will have a challenge in the course of the summertime, in particular, because so many of the things that children often do, camps, daycares, childcare facilities, might not be fully up. So the issue that economist was bringing to the table is real, and we need to work on that. It is, however, different in different parts of the country. You know, childcare is one of those areas where different provinces have different regimes and different capacity based on what they've built. So we've put money on the table that is including many things, but one of them is to support childcare, and we are looking forward to working with provinces to provide that support, which will, together with the other programs we have, remembering that programs like the emergency response benefit do have a positive impact as well. But we're going to need to find a way to provide that support so our economy can get up and running. And obviously, we recognize that the COVID-19 crisis has had a differential impact on different groups, and it has had a more significant impact on young people, on people who are lower earning, and it has had a differential impact on women. So that is all important, and it's all part of how we're trying to respond to this issue.
Perfect. And my next question is, I know that our government has announced $14 billion to the provinces and territories for sick leave, for childcare, for PPE, for transit, so monies that are going to go to the city. And so I know that we're still in negotiations around it, but how is it that we're going to ensure that the dollars allocated are directly going to be going to each of those buckets? So what kind of transparency are we going to be asking for as we're moving forward in delivering the $14 billion?
I think one of the things that we have seen during the course of this pandemic is notwithstanding the regular difference of jurisdiction between provinces and federal government, a high level of cooperation and understand that we need to support Canadians. So we will need to negotiate outcomes and agree on what we're trying to achieve. We're putting $14 billion on the table, and that's important. So those negotiations are going on, and we should expect that there'll be different points of view, as there always are. But I think that we share the goal, and I'm confident that we'll get to a conclusion that will make sense for Canadians in those areas, in the testing, tracing, in the sick leave, in the childcare, in helping municipalities, places where we know, if you think about municipalities, if we don't have transit, people can't get back to work. So there's a whole host of areas that we need to work together that are largely provincial jurisdiction, but the federal government can provide support.
About a 30-second question, Julie, and the same answer.
Sure. So, Minister, CCRM, how has been the take up so far? And if the take up isn't very big, would we consider other options to support small businesses and the need they have to support rent?
Well, first, I think I would say that we always have to look at all of these programs together. So there's many different programs that we're helping people with: the CERB, the wage subsidy, the CEBA loans to small businesses, the emergency commercial rent approach. I am very encouraged right now. We've after many weeks of discussion, we've seen provinces move forward with bans on evictions. That is starting to change the activity between tenants and landlords. So we've seen a very significant uptick in applications in the last few days. So I'm now at a phase where I think there's very encouraging signs this program can have a big impact on commercial tenants. And I'm looking forward to seeing landlords and tenants continue to work together in making sure that people can get through this time. And that's what we're trying to achieve.
Thank you.
Thank you both. Just a couple of points, Minister, on the economist that Ms. Zurowitz mentioned. Her key line was this. I think it has a nice ring to it. She said, "Childcare." This is her words. Childcare is the secret sauce to recovery, and she explained that in the minutes. Secret sauce to recovery, meaning that if women got childcare, they can get back into the workforce, et cetera, et cetera, et cetera. So that is a nice ring to it. There was a witness on June 4th, and if there's one thing I can really congratulate yourself, Prime Minister, and the Cabinet on is a willingness to basically change the programs to make them work as new information comes in. And I know you're trying to do that with the with the wage subsidy. But one company that was before us on June 4th, Brent Tractor is their name, and I know Finance has this information, but they employ 3,200 people. Their problem is that they actually bought out another company last year, and if both companies were operating on their own, they would both qualify for the wage subsidy. But because they purchased this other company, that affects their revenue, so they don't have the drop. And they are an example that I know you're trying to fix. They're not the only company in that situation, but I just draw that example to you because they were a witness before the committee. They're a strong Canadian company, and they were very worried on those 3,200 jobs. So it's in the evidence. I know it's gone to finance, but it's in the evidence on June 4th. So with that, I again sincerely want to thank you and the report that you do give us. There is a lot of information, and as Julie said, it is really unbelievable the amount of programs that have been rolled out, changes that have been made to them as we roll along. Still people falling through the cracks, I know that. But we thank you for the efforts, and we know that you're working long hours and hard work. So with that, thank you for appearing before us again.
Thank you, Mr. Chair, and thanks for all the participation. We'll see you soon.
Okay, and now turning to officials. There is, I know we have a new individual among the mix, Mr. Carter, Michael Carter, Executive Vice President of the Canadian Development Investment Corporation, and I know members had asked that you appear on behalf of the corporation before the committee. A lot of the other departments are normal. I don't know if you, Mr. Carter, have 2 or 3 minutes opening that you want to start with to basically explain what the Canadian Development and Corporation does. If you do, we'll give you the time. If you don't, that's fine. We'll go to questions.
Thank you, Mr. Chairman. I'm happy to give a bit of a short introduction. Canada Development Investment Corporation is a small group of people who are responsible to the Minister of Finance for looking after assets that the government gets and probably wants to resell. Examples in the background in the background are when the government's bailed out Chrysler and General Motors. The shares in General Motors and Chrysler were given to us to look after and to sell them. More recently, when the government purchased the Trans Mountain Corporation, that was given to us because the government does not intend to keep the Trans Mountain pipeline forever and will presumably sell it in the near future. More recently, we have, at the request of the government, incorporated the Canada Enterprise Emergency Funding Corporation, which is to carry out the LEAF program, the Large Enterprise, I can't remember the exact words, a Large Enterprise Funding program. So thank you for inviting me to the committee. I'd be happy to field any questions on that.
Okay. With that, I'll go through the question lists. We will start with Mr. We'll go to 5-minute rounds. Mr. Morantz, then Ms. Katrakis, then Mr. Barcelo Deval, and Mr. Julian. Before I do, though, committee members, this is something I should have mentioned earlier. When we had the steering committee report the other day, I think we established a certain deadline for witnesses for the general panel coming up. We've had to move that deadline up a little tighter. So there will be a panel, the second panel on Thursday, the 18th, after the bank economists appear. There will be a general panel with general witnesses that have asked to appear, basically. And so the deadline for parties to have their witnesses to committee will be noon on Monday coming. Noon on Monday, I don't know the date here. Thursday the 18th is the meeting, so noon Eastern time on the Monday before that. So, Mr. Morantz, 5 minutes.
Thank you, Mr. Chair. I wanted to speak to the global affairs officials that are here today. Whichever one could possibly shed some light on a question I have. And it relates to an arrangement basically that's been entered into between Global Affairs Canada and UNICEF and Global Affairs Canada and the WHO with respect to COVID-related grants that were issued for projects in Gaza and the West Bank. And the reason I'm asking about this is I just want to make sure that these monies, which are Canadian taxpayers' dollars, are not indirectly winding up with organizations that are listed on Canada's terrorist entity list. And one of the reasons it's a concern is that it happened before. In 2018, 2019, Global Affairs granted $1 million to UNICEF, and it wound up with, somehow with an organization called the Union of Health Work Committees, which is known as a popular Front for the Liberation of Palestine linked NGO. So I wonder if you could comment on these concerns and provide us with some assurances that this has not occurred and that the proper mechanisms are in place to ensure that Canadian tax dollars do not wind up in these implementing partners that may have links to organizations on the Canadian terrorist entity list.
Global Affairs.
Thanks very much. I'll field that one. I appreciate the questions. I'd say first and foremost, for the two projects you mentioned with the WHO and UNICEF, there are very specific and stringent conditions on that funding and a series of measures that we have put in place to ensure that there is no misuse or diversion in the field. The first point is that these projects are being implemented directly by UNICEF and by WHO, and there are not sub-implementing partners involved, so they are directly responsible for the COVID implementation. And then second, for our projects, we have what is called enhanced due diligence, and that includes a series of measures designed to prevent this misuse or diversion. It starts with very specific anti-terrorism provisions in our grant arrangements. It also includes detailed screening of individuals. And on the ground, there is a very extensive monitoring, site visit, oversight system that is put in place. And we follow that up also with detailed audit and evaluation measures so that we can be assured, exactly as you have described, that the funds are used for the purposes for which they have been designed. And so there is very particular care of programming that is taking place in West Bank and Gaza. Thank you very much.
Are these new measures because of what happened before the incident I described earlier in my comments? Or were these measures in place when your department provided $1 million that wound up with the Union of Health Work Committees?
Yeah, these are, we actually run a significant number of projects in West Bank and Gaza each year. And we apply this enhanced due diligence regime and framework to these projects, and they have been in place for some time. And they are very clearly specified, and we monitor each and every one of these projects.
So if they've been in place for a while, and this incident happened, I'm not sure if you're familiar with this incident, but I have the ATIP on it. I actually have a copy of the agreement, and in the schedule, it talks about the implementing partner being the Union of Health Work Committees. If you've had this regime in place and it's so stringent, how is it? How can we have confidence that if it happened then under the same mechanisms that you're describing, that it isn't happening now?
Yeah, thanks very much. I would say that these mechanisms are indeed very stringent, and they cover a whole host of activities, right from the agreement to the implementation, to the operationalization on the ground, to working with the partners, and then the audit and evaluation function at the end. So they are indeed robust, they are indeed stringent, and I am aware of the case that you referred to. And all I would say is that we have been working with UNICEF, with the other programmers, and we have applied diligently this system across the board.
Okay, thank you, Ms. Koutrakis.
Thank you, Mr. Chair, and thank you to our witnesses this afternoon. I have two questions, Mr. Chair, and they're both to Canada Revenue Agency. So the first question is, recently there has been debate surrounding the necessity of fines and potential jail time for the small number of people who take advantage of the CERB by submitting fraudulent applications. Can a representative from the CRA comment on why it is important to include provisions that penalize and prosecute people who abuse the CERB?
CRA?
Mr. Chair, it's Ted Gallivan from the CRA. I'll take that one.
I think that the first thing to talk about is the word fraud and where we would apply these measures and where we wouldn't. People who've made a mistake, people who are confused, those people will simply be asked to repay the funds. That's not really where we are focused. Where we are focused is where organized crime organizations, for example, people who have had taken advantage of data theft and ID theft. We've heard reports of people who've gone into senior citizens' homes and tried to take advantage of vulnerable Canadians in that way, making claims under those names. Those kinds of sanctions, those kinds of incidents really call for tougher measures. And so we are getting a lot of leads put in by Canadians. We ourselves have picked up a number of cases where we're concerned. And we need our own enforcement mechanisms. Right now, we have a number of joint operations with law enforcement, with local police. But we would like to have our own powers at the CRA so that we could pursue these ourselves. And again, I think an important point to make that these are really for people operating at scale or doing this across many, many innocent Canadians and taking advantage of their data.
So my second question is on the mechanisms. Can you explain what type of mechanisms can be put in place to identify the deliberate fraud as opposed to a well-being Canadian who just made a mistake?
Sure. So right now, the system was set up with controls in place around something like a change to a bank account information. And so we have certain flags right now that are picking up claims that are saying, well, you're applying for this program, but just yesterday you changed your direct deposit information. That seems suspicious, and we're able to ask questions. So right now, even without enhanced controls, we have a situation like that. But we have other situations where we find one practitioner who has 4,000 clients, and 3,900 of their clients have all qualified for the program. Now, there could be an innocent explanation for that, but maybe not. And so if it is the case that that person is either inciting fraud or doing fraud on behalf of 3,000 people, we do think it's important to have a criminal sanction at the end of that. And I think I think the criminal sanctions that are being sought are really to deter people operating at scale, because merely asking them to pay the money back won't have the deterrent effect that we need.
Mr. Galvin, do we know how many cases there are that are fraudulent? Do we have a number on that?
No, and I think one of the questions, again, is that definition of fraud. There are a number of Canadians who, in all good faith, have applied for this program and are now realizing they have to pay it back, and several hundred thousand have already paid it back. That's not who we're talking about. I can tell you that 4 or 5 people that were already under criminal investigation by the CRA and law enforcement for other reasons also chose to engage in CERB fraud. And in some cases, their communications are being intercepted, and that's why we're aware of it. So there are a number of cases where people who are involved in criminal activity have expanded that activity into the CERB space. And what we're trying to do is get the authority to respond accordingly.
Thank you.
Okay, thank you. Then turning to Mr. Barcelo Duval. Xavier, you there? Mr. St. Marie, are you taking this one? There you are. Go ahead, Xavier.
Can you hear me now? Can you hear me, Chair? I apologize. I have removed my headset. Here is my question, which is meant for the Investment Development Corporation of Canada. I understand that within the COVID-19 context, there has been a complete collapse of the oil prices, which makes a number of investments more problematic, and particularly in the oil sands, given their yield. So has that repercussions in companies which are also the property of the Canadian government?
Thank you for the question. I don't believe that we have two subsidiaries that are partly related in the energy business. One of them is the government owns an 8.5% interest in the Hibernia oil field offshore Newfoundland. It is still producing. And obviously prices are lower, so the revenue is lower, but it is still producing at full steam. The other company is the Trans Mountain Pipeline. The pipeline is full and continues to be full. So the COVID has no effect on its business. The expansion of the pipeline is going ahead because it was deemed by the Alberta and British Columbia governments to be an important project, so construction could continue with obviously all sorts of safeguards for COVID.
Mr.
Monsieur Barceau-Duval, my question to you would be to know regarding the additional protection measures. Will it be possible to have an update of the additional cost for the building of that pipeline? Because I imagine that there will be an overcost.
Thank you. The cost estimate that was produced was last January was $12.6 billion. So far, we don't see any likelihood of an increase of that cost. At present, things are going according to plan, and the pipeline should be completed by the end of 2022. And every indication we have is that the 12.6 billion number is still a very sound number.
Thank you for your answer, sir. I am a bit surprised, I must confess, that I hear you telling us that there will not be additional cost, given the fact that there will have been some distancing measures for staff, which should create additional cost and perhaps delays for suppliers based on COVID, which could be the source of additional costs. Here is my next question. It has to do emergency credit for large companies. So when will we know who are the beneficiaries of such loans to large companies? Will this be publicized, the list of the large companies which will benefit from such loans? When shall we be able to be informed of the names of the companies which will be benefiting from those loans?
Our intention is that as soon as loans are made, we will announce those. I'm not totally sure of the, I think there is a requirement that the minister puts them to Parliament first. I'm not sure about that, but in which case they will go that way. If that is not the case, we will publish them on our website, much the same as EDC does now with its loan portfolio.
Last question, Mr. Barceau-Duval.
Oui, merci, je suis content de vous.
Thank you. I thank you for this transparency. And my last question has to do with air transport. Will some help be organized for the air transport sector? And even if they might also be requested to refund all the consumers who have bought their tickets already, and I do not think that voters will like the idea that these companies will not have to refund the tickets which have been already bought. Thank you.
I think that would go to the Department of Finance. Is anybody there willing to take that question? I don't know if it's one the bureaucracy the public servants can answer, or does it have to go to the minister? Anybody willing to take a stab at it? Go ahead, Ms. Dancy. Your mic's on. There.
Great. In respective discussions with air carriers, so of course the large employer emergency finance program is available to air carriers that meet the size threshold of that program. In respect of the issue of vouchers, that would be a matter that is discussed outside the context of that program. That would involve government policy, government decision making, were there to be a movement from a regulatory or other perspective. We wouldn't anticipate that being adjudicated through the lending program. The officials or the minister best placed, I believe, to comment on that issue would be the Minister of Transport and Transport Canada.
Okay, thank you. Turning to Mr. Julian, and Peter will be followed by Mr. Cooper. Peter.
Thanks very much, Mr. Chair, and I appreciate all the witnesses being here. We hope your families are safe and healthy. I have 2 comments and then 5 questions. I'll put them all out, and hopefully
and you only got 5 minutes to get the answers in too.
Yep, fair enough. 2 questions for finance and 3 questions for Mr. Carter. But I would like to say as a comment to CRA, I'm glad that you put that out, that these are all elements covered under the criminal code already, that the police can already do follow-up when it comes to systemic fraud or people misusing SIN numbers. So I'm glad you have publicly said that. That's very important. My comment would be when we've got publicly available information around the Bahamas Papers, the Paradise Papers, the Panama Papers, the Isle of Man scam, no corporation has ever been charged, let alone convicted. I think it's a bit rich to focus on widows and students who may have inappropriately gotten the amount. But my questions are first to Mr. Carter. You mentioned Trans Mountain. The construction costs obviously have to be revised. There's not a single person, and I'm a few blocks from Trans Mountain, not a single person in the Lower Mainland that believes that the costs will not be anything less than 50% higher than what you're projecting. So I think it's about time that Trans Mountain did a revised construction schedule. I would be interested, and my question is this, in how much we lost on Trans Mountain, including interest payments last year. And then in terms of the LEAF program, 2 questions. First off, how does CDEV intend to monitor executive bonuses and all of the things that are supposed to be conditions around the LEAF to not to issue executive bonuses? And what is the process in terms of LEAF loan forgiveness? We've seen a lot of loans that have turned into grants and gifts in the past, even in January of this year. What would be the process if a company just wanted their loan forgiven? Is it the finance minister going to the board? Is it the board making a recommendation? And then to finance, 2 questions. Could I have some clarity around the supplementary unemployment benefits? There is still inconsistency about whether or not somebody on the CERB can receive a sub. We're hearing from other ministries that they can't. We heard from finance that they can. And lastly, ferries as designated organizations. I'm thinking of the BC ferries. Where are we at in designating ferry companies as designated organizations that are able to obtain the wage subsidy? Thank you very much.
Start with you, Mr. Carter. I don't know whether we'll have time to get all through, but Mr. Carter on the first couple of questions.
Thank you, Mr. Chairman. In reverse order, there is no intention that any loans will be forgiven. Our mandate from the minister is once we make a loan, we become purely commercial, the same as a bank. The second one, with respect to executive compensation, there is limits put on executive compensation as a part of the loan program, and those will be strictly enforced. They will be attested to by the senior officers of the company and by the directors of the company on an annual basis. As far as the Trans Mountain numbers are concerned, I don't have them in front of me. Our annual report was put up on our website and was tabled in Parliament recently. But I'd be happy to come back to you with a written answer to that specific question.
Thank you.
Okay, if you could, Mr. Carter, that'd be great. Then I think the other question on supplemental EI benefits would go to Employment and Social Development. Who's on it? Go ahead, Mr. Ram.
Good afternoon. Thank you for the question. So I think as we have stated before this committee in the past, the provisions for supplementary unemployment benefit plan that exist under the employment insurance system do not exist for the Canada Emergency Response Benefit. Having said that, there is an exception for up to $1,000 that people can receive from employment or self-employment while they're receiving the CERB. And that can include payment from employers that could be related to provision under a subplan. I hope that's clear.
Thank you, Mr. Ram. And ferries, is somebody willing to take that? Go ahead, Andrew.
Thank you, Mr. Chair. I think the question relates to the definition of eligible entity. And the legislation effectively excludes corporations that are all substantially owned by the federal government, the provincial government, or a municipality effectively. So to the extent that a ferry didn't fall into that category, it would qualify. To the extent that it does, it would not under the wage subsidy legislation. So that's the overall policy. I think I'm not sure I understand in terms of where we are on that. That is the legislative framework as it stands.
Okay, we will have to end it there. Your point, Peter, is the ferries or BC ferries are not eligible? I'm just not quite understanding here.
My point is BC Ferries is applied to be a designated organization in the same way that we have specialized schools that were designated and are able to obtain the wage subsidy program. So BC Ferries has done the same thing. Our understanding was an application had been made to make it a designated organization. What I understand the answer is this has not been approved.
Okay, well, it's information noted, and Mr. Marshland and others can take that back. Turning then to Mr. Cooper, who will be followed by Mr. Fragiskatis. Michael.
Yeah, thank you, Mr. Chair. I want to ask a couple of questions about the LEAF program. First of all, the minister in his testimony before the committee earlier today indicated that there had been some uptick. I would be curious to know what those figures look like in terms of applications.
Thank you. I think the minister is actually referring to another program, but in terms of our program, we've been open for business for about less than 3 weeks now. We have got a few dozen inquiries, which it obviously takes time to get from an inquiry to an application to making a loan. We have not yet made any loans. I wouldn't expect that we would make any loans for another few weeks at least, because the negotiation of those kinds of loans does take some time. It requires the cooperation of other lenders, because as part of our security requirement, we want to be able to share as to 20% in the security, which will require the other lenders to agree to that, which doesn't happen overnight.
Have there been any applications?
Yes.
Okay. How many, roughly?
It's around 10 at this stage.
Okay, that's all. Okay. Now, just in terms of some of the eligibility criteria, is a company required to sign on to the recommendations of the Task Force on Climate-Related Financial Disclosures?
I'm not. We have requirements in the term sheets that require the companies to file the information that the government wants companies to do relating to how they get to neutral carbon emissions by 2050. This is a process that securities industries and the government is trying to get all companies to do. We're making it mandatory for companies that borrow money.
One of the concerns about the program that I've heard is the presence of a government representative on a board. Can you speak to when that observer would cease to be present? Would it be upon the repayment of the loan?
We have a right to appoint an observer. I think in practice, we probably will not appoint an observer in most cases. I think it's there as a backup in a case where we have some concern about the particular company. It's the experience that the American government had a program for the US banks called TARP back in 2009, 2010. They had the right to appoint an observer, and in practice, I don't know whether they ever exercised it, but they certainly didn't exercise it very often. I anticipate that we will be in a similar situation.
And what would be the circumstances or the parameters upon which an observer would be appointed?
We haven't worked those out yet, but it would obviously be most companies, most loans would not be problematic. If there was a problematic loan, we would want to look at what was causing those problems, and we might want to take some steps, such as appointing an observer.
Last question, Michael.
Yeah, and maybe if some clarity could be provided with respect to what constitutes having significant operations in Canada for the purpose of qualifying.
It is not something that you can put an absolute hard number on. It is a question of the industry. ISED is doing sector reviews as part of this process, and I suspect that ISED will have things to say in that area. It's outside of our area.
Okay, with that, we'll move on to Mr. Fragaskatis, and then we'll have a couple of minutes each to Mr. Cumming and Mr. Fraser. Mr. Fragaskatis.
Thank you, Mr. Chair. Thank you to the officials for appearing yet again today. That's very much appreciated. Question relates to CEBA and the inability of individuals who use a personal account to access it. I'm just trying to understand what has been the issue, what has been the challenge with the personal account? Why has that been seen as problematic? Just looking for an answer on that.
Who wants to take it? Mr. Halverson. Halverson, go ahead. Your mic's on. Your mic's on. There you go.
Thank you for the question. So the issue with the personal account has to do with essentially what is referred to as knowing your client. When a business sets up an account as a business bank account, the financial institution that they deal with will go through a vetting process. They'll be looking at various websites from an anti-fraud, anti-money laundering perspective, looking at the specific name of that business, looking at the articles of incorporation, looking at the beneficial owners and any connections that business might have to malfeasance. And so it is the responsibility of the financial institution to ensure that it has a very good fix on what that entity is. It also knows that whatever transactions are happening in that account are happening specifically in connection to the business activities. And so again, from a money laundering perspective, you have a clear understanding of the cash flows and the relationship that they have to what is specifically business activities. As you move to a personal account and individuals that are conducting business from a personal account, a couple of things happen. One is you just simply do not have that association with the business name as the financial institution has gone through the vetting process. The process that they would have gone through in order to get themselves comfortable with an individual involves a considerably more limited degree of scrutiny. The other thing is that if you're looking at the account from a transactions perspective, what you're likely to find is that there are commingled transactions where somebody may have been paying for a family dinner, and then perhaps on other occasions they're using the account for activities that are very focused on their business purpose, and it becomes for practical purposes impossible to disentangle that, which just again goes to not understanding that entity quite as well. When it comes to the Canada Emergency Business Account Program, because the program was designed to move very, very quickly to make funding available to its recipients, it had to rely on certain points that were very, very easy to validate. That was one of the critical elements of its success in moving as quickly as it did. And so it was really for that reason that among other things, it needed to rely on the fact of that existing business banking account.
Thank you for that, and I appreciate the technical reasoning. I ask it because I have heard from a number of constituents who use the personal account that they've had access, that they've obviously had difficulties obtaining the support of CIBA, and they need it right now. And I know this matter is being looked at. The minister has been very good on this and is seized with the issue. But I raise it on behalf of constituents because they have worked hard. It has made very good business sense for them to have a personal account rather than a business account. They could not have predicted COVID-19. They could not have predicted the requirement that our government put in place with respect to CIBA, privileging the business account over the personal account. So I just raise it because I have heard it a number of times in the constituency. But as I said, the minister has been quite strong on this, and we continue to adapt as a government to fill in gaps that are in place. We are flying the plane and building it at the same time. I also wanted to ask, and this is for any official that wishes to take it. You would have, of course, seen the recent changes that were introduced by the CMHC when it comes to mortgage rules and specifically the lending requirements that are in place when it comes to securing a CMHC support for insuring mortgages. To what extent is the Department of Finance concerned about household debt and its potential negative impact on the economy? I know this has always been a concern. It's been a concern in finance. It's been a concern on the part of the former governor of the Bank of Canada, and that was pre-COVID-19. Obviously, with COVID-19 and its impact on the economy, I wonder if anyone from finance could speak to what this all means for household debt levels that have seen Canadians already in a very difficult position when it comes to making mortgage payments.
Who wants this one? Okay, Mr. Leswick. Your mic's on, Mr. Leswick.
On now?
Yep.
Perfect. Yeah, thank you for the question. So obviously this has been highlighted as a key risk to the Canadian economy going into COVID-19. And I think the fundamentals are pretty clear to everybody that Canadians were bearing a pretty heavy debt load in relation to their income. Probably the most flagship measure is the debt to income ratio that Canadian households carried into the crisis. And for fundamental reasons is just because we wanted to have a lower debt load so that when we endured the crisis that Canadians would be able to smooth their consumption effectively by taking on more debt. Now, in that position, we've endured the crisis. Canadians are, notwithstanding some of the very, I think, generous government support programs, are going to have to take on more debt to not just fund their essential needs, but some non-essential needs, whether it's paying insurance or putting gas in their car, and that debt level is going to creep higher. Now, the level itself isn't like, just on a nominal basis, there isn't some optimal level of debt for any household to carry. I think we're probably overly fixated on the number. And in the same context, Canadians' ability to service that debt will be relaxed with lower interest rates and longer amortization periods or mortgage deferrals. But it's definitely something we need to keep our eye on, because as we recover through this crisis, there will be another crisis around the corner, and the same expectation will be that Canadians will have the opportunity to deleverage, and then when they need to make ends meet during the next crisis, they might have to take on more debt at that point in time. So it's something we always keep our eye on, but we do it, I think, in balance with other kind of vulnerability metrics.
Okay, we will go a little bit over. We'll take a couple of minutes for Mr. Cumming and a couple of minutes for Mr. Fraser. James?
Great, thank you. And this would be for finance. I raised it with the minister as well, that there's a specific example of a company that cannot get access to queues. And we raised in April the idea of having finance look at the idea of using different metrics for revenue calculations. So specifically for this business, they receive a flow through with insurance premiums. So though it flows through, they make no margin on it, but it keeps their revenues quite high. But they really make their money on transactional when there's claims. So they make money off their claims costs, which is very small portion of revenue. So as you can imagine, with doctors closed and the amount of claims volume going through, that's gone down, but they still have to maintain all their staff because they're able to do this. Would the finance consider in this case some different form of metric, because this is a business that has really been hit hard because of the lack of administrative fees, which is really the real revenue of their business, not the flow through on the insurance premiums?
I don't know who can take that from finance. Whoever you are, just push your mic and go for it. Go ahead, Andrew.
Well, thank you very much for the question, and I can't comment on a specific employer's circumstance. I guess I would think like to understand a little better the exact circumstances. So perhaps I could ask the member to provide them to us, and we will take a look at them with the Canada Revenue Agency.
Okay. I'll send specific directly to you, Mr. Marsland.
Yes, thank you.
Okay. Do you have time for one more?
Quick question, James.
Yeah, Mr. Carter. Given that this is a new program for your entity. How are you staffing up, or how are you providing the management team in place to be able to deal with the LEAF loan program?
We've done several things. We have newly hired a president who joined us just before the end of May. We have put together a board of directors, which includes several experienced financial people, headed by Sandra Roche, who is an experienced financial executive. And in terms of employees, we are providing Canada Development Investment Corporation employees on a part-time basis, temporarily. We are relying primarily on financial and legal advisors who we have hired, and we are infilling behind that. We've currently hired 3 additional people, and we have plans to hire more. It depends, how many we need depends to a large extent on how many loans we end up putting out, which of course at this stage we don't know.
Okay, thank you for that. Good information to have. Mr. Fraser, Sean, you'll have to wrap it up.
Thanks very much, Mr. Chair. My question, I think it'll be Mr. Gallivan who answers, to build upon a previous response he gave, and it has to do with the recent additional powers to prevent fraud with respect to the Canada Emergency Response Benefit. the kinds of examples that I think people are worried about, the calls that I was getting early on at the constituency office involved individuals who weren't aware that their EI claim was automatically going to be processed as a CERB claim. Individuals who maybe got an unexpected call back to work after they had applied, or people who made a simple mistake and didn't realize they weren't supposed to apply. It would be very helpful for you to confirm unequivocally that those are not the people that will be prosecuted with the threat of imprisonment, but as you said before, that will target individuals who are running criminal organizations at scale. If you could add clarity, I think this is something the public would greatly benefit from, to ensure that those honest mistakes are not going to be punished with that kind of the full weight of the law in that sense.
Mr. Galvin, you there? Did we lose him?
If we lost him, I got a bunch of other questions for these folks. I'm happy to go elsewhere.
No, I believe I heard him.
Mr. Chair, it's Mr. Chair, it's Frank Vermonten on the line. Yeah. And it seems like Mr. Galvin has been disconnected. So let me just provide assurances that these measures would absolutely be for egregious cases of, as Mr. Galvin pointed out, organized crime. We have absolutely no interest in those that have made mistakes or have interpreted the attestation in a different way. That's not what this is about. This is for the egregious cases of scale, where you get where you have individuals who are trying to get the benefit illegally, unequivocally. They're going after 100, 200, 300 CERB payments. It's that type of thing. It's definitely not anyone that would make a mistake or so that's really what we're after, those egregious cases.
Thank you, Mr. Chair. I've got one final question. Mr. Leswick, you suggested that some of these kinds of programs will be responsive not only to previous or this crisis, but some potential future crisis. And I'm curious, one of the things we haven't really dug into, we've had some conversations at this committee about the extension of existing benefits. We've not really had many conversations about the preservation of the structures that actually administer these benefits should they be needed in some future crisis. I'm curious if you have thoughts on what it would take for the federal government to put in place structures that could be used automatically to stabilize the economy in the future should another crisis of this nature arise.
Mr. Leswick.
Thanks for the question. I mean, it can be quite brief. I think there's a lot of lessons learned, and obviously there'll be I think I undersell it to say a postmortem on what the crisis has taught us. And I think, looking forward, structural changes to things like employment insurance and what we've learned around the interaction between the CERB and the self-employed, and even just our operational capacity to stand up systems and deliver benefits at this intense cadence, and CRA being the front and center of that. I guess we'll be collected as we look forward to make structural policy in government going forward.
Okay, thank you. Just a reminder for members again, the deadline for witnesses for the general panel on June 18th is now noon Eastern time on June 15th. So with that, look, I know every 2 weeks we see most of you folks. The new addition this time is Mr. Carter. But thank you very much for taking the time, giving us the background information and assisting Canadians as you all do your best to do. So thank you again for appearing today. With that, we will adjourn. Meeting adjourned. Thank you all.